Good afternoon, everybody. My name is Jay Martin. I am an investor and the CEO of Cambridge House International. Now, everything I do on this channel is done in the pursuit of improving my portfolio. Today, we're looking at the renewable energy sector. Let's do it.
What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, my first guest today is the founder of KSIR Capital Management, and he used to author the KSIR report on behalf of the legendary Doug Casey, Mr. E.B. Tucker. Enjoy. Okay, guys, Jay Martin here, CEO of Cambridge House, and today I'm joined by E.B. Tucker. E.B., how are you?
Good. Thanks for having me.
Yeah, it's my pleasure to have you. It's about time we caught up. I'm looking forward to diving into a few topics with you. For anybody who's not familiar with EB, he's the author of Why Gold, Why Now, founder of KSIR Capital, corporate finance advisory firm that focuses on the precious metals industry. He authored the KSIR report on behalf of the legendary Doug Casey and is a director at Metalla Royalty and Nova Royalty. Now, EB, what I do on this show is I really just do my diligence publicly. When I have an investment idea that I'm excited about, for example, right now it's renewable energy. The next step I take is I start shortlisting CEOs in the space that I believe are the winners, right? They've got the proven track record. Maybe they've attracted the shareholders that I respect. They've attracted the smart money, et cetera. But then simultaneously, I have conversations with, I call them macro thought leaders, people like yourself who understand the bigger picture trends that are driving that narrative towards my small cap investment idea to either prove or discredit my thesis. For example, you could say, yes, you're absolutely right to be bullish on renewable energy, but Jay, you're 10 years too early, and here's why. And so that's what I do on this program. And most people know you, and I knew you because of your book and your precious metals content, but you've made some price predictions and I believe some investments into the copper nickel space recently. And so that's what I wanted to talk to you about today. And starting with a price prediction I heard you make recently was nickel, forecasted to hit $25 per pound. Right now it's sitting around $8. So at a super high level, EB, what's driving your bullish sentiment towards this sector right now?
All right. Well, the most important thing you've said, and the thing that's, if you get this right, your whole life your financial life will take care of itself. Okay. So you're dead on with you've got to get the big picture trend right. I mean, if you had been detailed looking at uranium stocks, 3 months after Fukushima, forget about it. It's like you're like 6 years too early or something. So I mean, you run out of money and patience. Okay, so you have to get the trend right. So what's the trend? So Joe Biden is going to be a weak dollar president. People have got to understand that. This is the dollar runs in these big cycles. Joe Biden's going to be the captain of the dollar ship, and it's going to just slowly go down the chart, and it'll have little rallies and then it'll keep going down. And that's really important for commodities. It's because all these things are priced in dollars. So yes, you have the EV trend, so EVs 1 or 2% of cars produced goes to 2, 3, 4, 5, 6. They literally do not have enough nickel to make the batteries. They need 45 or 50 kilograms per car. They need about 100 pounds of copper per car compared to probably 50 for the average, combustion engine that comes across the line. But there's other pieces of it that you would have to get into. Like, for example, in the US, you have all these solar panels and they capture all this energy and feed it back onto the grid, and it fries out the grid. So they got to store the energy. So they need these giant battery facilities that store the energy. And now the batteries are 8 parts, 80% nickel, called 811. So they're the nickel, the component of nickel doubled in the last few years. And some people say, well, there's going to be other battery technologies. And that's true. But what happens is that these things are multi-billion CapEx investment periods. So yeah, I mean, forecasts your kids' will probably be teleporting places. So I mean, it's too early to invest. Okay, so you have this sweet spot where not everyone has an electric car right now, but the electric, it's right there. I mean, you have companies saying 2030, we're not going to do it. And what I want to do, Okay, because you talk about the macros. Macro is how I came along in the business. That's my thing. And what I do is, because people that I know, socially say, well, are you a day trader? And I say, no, I'm not a day trader. I mean, I've bought Metalla, periodically the whole time for 4 years, right? So, but I haven't sold any, so technically I guess I'm a day trader because there's a lot of days where I'm buying Metalla stock or Nova stock in the market or something, right? But what people don't understand is I'm not really doing that much. Like you find which way the wind is blowing and you put your sail up and you go, and you don't worry about, having to jump off onto some other guy's boat halfway through. And, you don't have to do that much. When what you have to do is you have to get that, where's the wind coming from right now. Let's talk about the price prediction. You mentioned $25 nickel. Now I have said that, and I do think nickel will hit $25, but let's focus on something more short term. I think nickel will hit $10 next year. Okay. $10 is a level that's going to be very interesting, because what people need to understand is half the world's nickel roughly comes from Russia. About a quarter of the world's nickel comes from Indonesia. The rest of it is spread out in other countries, most of which are not really the types of places where you want to be out on the street late at night. So as this demand piece rises and the price goes up, there will be changes. Some nickel projects at 10 or 11 bucks that don't work today start working. There's some things that can happen, and $10 or $12 is probably a pause area for nickel. You get that rise and you get a pause because you get more supply, and then you probably go again. So people need to see that this isn't just like it does one to the moon and then it's done, right? And you don't need to go out and hoard up physical nickel. You don't need to go to the bank in the US and get like a pallet of nickels, forget about it. Nickel Royalty Company is the way to do it, in my opinion, because there's just not that many nickel mines. There's just not that many. There's only a few in the free world that are, because these things are huge. It's not like a gold project. You can find 1 million ounces in Wyoming and you can make a gold mine. Okay. But nickel's not like that. So you're talking about 40 years of mining.
Yeah, that's a really important distinction, right? And I think that a lot of times precious metals investors think about copper and nickel the way they think about gold, right? And sure, there's some speculation upside. If the price goes up, you'll see some of that, right? But to really pick the winners, it's a much more complex business model, right? Because you find the economic gold deposit, you can either develop that into a mine like Darren LeBren's at Pure Gold or John McConnell at Victoria. But the cost associated with developing a copper nickel mine is vastly different, exponentially higher, and so is the time horizon. So it's not feasible for the junior to do that. So you're then left with the second option, which is find the suitor who's going to acquire you. And once again, gold production, you have hundreds of options: junior, mid-tier, big caps. There's maybe half a dozen, correct, in the copper space that are actually able to acquire and build.
Maximum. And they can be choosy, and they're going to pick things that are going to last 4, 5, 6 decades.
Right.
You fly into Salt Lake City and you go over Bingham Canyon and you look at that mine. It's so big you can see it from space on Google Maps. Go on Google Maps, look south of Salt Lake City, and you can see the Bingham Canyon. That thing has been running for almost a century. So, it's not the same. And to bring your gold set of glasses into the copper space is a big mistake. Now, that being said, you mentioned Alex, who I'm a big fan of, who's the CEO at Nova, where I'm on the board. Alex understands that Metalla, we've been running this thing for 4 years. It's one of the top performing royalty stocks. Still, nobody understands what we're doing, but we tell them all the time. There's no secrets. We have been able to grow the company from 0 to 63 royalties by folding in third-party royalties into the business. You can see there's a lot of repetition. And Alex understands that this is a winning formula. You're not going to
Alex Tsukernik at Nova Royalty.
Tsukernik, yeah. And we're not going to Rio Tinto and saying we'd like to buy a royalty on your big mine. It's not like that. What we realize is that there's a small universe of potential copper and nickel development assets in the free world. And so we've made a push to find existing royalties like Twin Metals. You know, we did the Twin Metals deal this fall. It's Minnesota. Okay, Minnesota's a nice place for your money. Dumont, you know, so you look at, you know, Quebec and Eastern Canada, that's a nice place to be, right? So North America, South America, there's some assets out there, and we've done our best to go and find royalties that are existing and to bring them into the business. You know, we're not out there trying to, you know, to loan money to Vale or something. It's not what we're doing. And so my point is that it's not like in gold where you can have a bunch of these kind of imitators come along and try to start royalty companies the wrong way.
Right.
This is not that many. So you get positioned and you just, that's it. And that's my approach. I mean, no, there have been copper stocks this year that have gone up 900, 1,000%. And that's because they have possibly viable assets, and they've done a good job of kind of growing them through copper's down cycle. You know, so they've done a good job of proving, and people are now saying this actually might become a mine. And they might be right. I mean, I've met a lot of these guys. I mean, they've really done good work. But I'm just not that crazy about the mining business, because it's the actual operating portion of the mining business is very high risk. And I want to play this trend, and I don't want to get my arm cut off in the process. I mean, and that happens, as you know, because you can have this kind of like something come out of left field. If you have one stock and you have a 200 million market cap stock, you think it's going to be the next, you know, big mine, boom, you could get, I'd rather have a couple dozen royalties and play it that way.
That makes sense. Okay. Now I want to revisit something you said quickly towards the beginning of our conversation, when you were talking about the technology behind renewable energy and battery storage and how fast it changes and all this stuff. And, you know, when people think about renewable energy and battery technology, you know, I think a lot of mines go directly to lithium, they go to cobalt, you know, and these more obscure rare earths. I think the challenge, I mean, battery tech is a new technology. Renewable energy is a new technology, right? I think we're just scratching the surface about where this is going. With any new tech, there's going to be pivots. Things will change, right? And we've experienced that with cobalt, right? It's just very difficult to get your hands on, right? And so
cobalt's now a lot less in the 811 battery. Its cobalt portion went down.
Yeah, because it had to, right? It was too,
and nickel went up.
Access, yeah. Exactly.
Yeah.
You know, lithium is another commodity that comes to mind right away. There's so much of it. It's very abundant, it seems. So is there really an angle there? What do you have to say to investors who are trying to protect themselves from those pivots? They want to play the renewable space. They want to play the battery space, but we've seen how these pivots can massively impact forecasts.
Well, nickel is hard rock base metal mining. I mean, that's very unique compared to lithium. You know, when you look at cobalt, you know, about half of it came from DRC. Right. So you had a big jurisdictional problem. Now nickel also has a jurisdictional problem because you have, you know, Russia, Indo, but North America has viable, Dumont is a very viable nickel development asset. I mean, and you've seen consolidation around it, you know, in the last year. It's very serious. Okay. So, I mean, you didn't have that with cobalt. Now, when I worked for Doug Casey, which I retired from writing the KSIR report, but when I worked for Doug Casey, who, by the way, is an investor in Nova, I don't think he would mind me saying that. He's very enthusiastic about Nova. He loves royalties as well. So when I worked for Doug, we wrote a big expose on batteries, and we actually talked to this guy named Dr. Goodenough, who invented the lithium-ion battery. He was at University of Texas. He's very old, and he's a very nice guy, very, very smart. He invented the lithium-ion battery, and he told us, we quoted this in the newsletter, that you can make a battery out of almost anything. I mean, he said you could take silica in the laboratory and make a battery out of it, but the problem is that not all batteries will hold a charge in, say, all weather climates or right, you know, for very long or whatever, and heat, you know, all these different things. And so what happened is that the lithium ion batteries evolved to what we have now, which is the nickel. It's mostly nickel, because nickel ended up being a very stable component for keeping a charge, holding a charge. I mean, remember your Tesla, you had range anxiety. What that means is that, you know, if you're in Vancouver and try to drive to Kelowna or something, the thing might run out of juice, and then we better be on a downhill, Yeah. So this is how the 811 nickel heavy battery came into play. Okay. So back to your question of how do you play this? I don't need to play every single trend. For example, I don't need to play Tesla, okay, if I'm playing the EV trend. Nothing against Tesla, but I might not want to buy an automaker.
I'm with you.
Because it has tens of thousands of people working there. Sure. I don't want to be the boss. You have employees. It's really tough, man. You don't want to do it. So when you look at a royalty company, I mean, Franco-Nevada's got about 25 employees and it's a $20 billion company or something, right? I mean, it's pretty magical. Alex, Tsukernik and his team is very small, and he's every single day he is working to get me more copper and nickel exposure, okay, with as few people as possible and no requirement to put more money in later.
Right.
That's what's interesting about royalties. It's a perpetual free carried interest in a mineral asset. And what that means is say you have 1% on a copper claim. That 1% is forever. You don't ever have to help them dig or dynamite or, work on strikes, labor strike, nothing. 1%, 1%, 1%. Even if the company goes out of business, the next company still going to have to pay you 1%.
Right.
That to me is how you play a mega trend.
Okay.
Because the future value of 40 years, these copper mines, 40, 50 years, I got 1% forever. 40 years from now, what is 1% of the copper production worth? Your Excel sheet almost can't compute it.
Right.
If that makes sense, right? So that's why I like royalties. And so that's how I play it. I mean, you can play it with lithium. Sure, you can do it. It's possible.
Right.
Let me know. Good luck to you. Let me know. I know people who've done it. I know people that were involved in lithium companies, got bought by the Chinese. They made money.
Yes.
It was great.
Absolutely.
But personally, I'm looking for the easy trade.
Yep.
I'm not looking for brain damage and extra burning the midnight oil to figure it out and biting my nails. And I'm not looking for that. I'm looking for the easy trade.
Okay, I'm with you, and I know you're tight on time. I got one more question I want to get in front of you, EB. You mentioned some of the challenges accessing cobalt deposits in the DRC. I think we're all aware. And you made a point to mention about an agreement done in Minnesota, in Dumont. It's a safe place for capital. That's what you said. How important is source country going to be, do you think, moving forward, specifically in the commodities fueling the renewable sector?
Okay, so Elon Musk twice since the summer came out in press releases and said, I'll offer a long-term lucrative contract to anybody that can supply me with essentially, he said, nickel from a safe source, like a reliable source. And what he meant by that is a green source. It means you can't be mining the nickel and dumping the sludge into the bay. Okay. And the second thing is you can't be having, toddlers mine the nickel somewhere, orphans or something. Okay. So what's he saying? Why would he do that? He's not running a nickel company. He's running a car company. And why would he be saying that he needs this agreement? Okay. So I definitely think source matters. And I think as we go forward, if ESG investing is so big, right? As these companies go upstream to look at where all this stuff comes from, Apple can't make a phone and say that they are, a virtuous company and then get parts for the phone from some place that's reprehensible. Okay. People are not going to, they're not going to allow that. Right. Mm-hmm. So you can't buy a Tesla and say, I'm solving the world's emissions problems.
Sure.
But I'm getting the nickel for the batteries from Indonesia from a very sketchy, I'm not saying Indonesia's sketchy. I'm just saying there are less than reputable mining operations around the world because it's very lucrative and they don't have environmental standards. So look, guarantee you if that Twin Metals project in Minnesota goes forward, is not going to be sloppy. Okay, because the U.S., the U.S. does not permit mines that just do whatever they want. Okay, they don't want tailing spills. They don't like reclamation problems. I mean, forget about it. Okay, so Dumont in Quebec is very mining friendly, but let me tell you something. They're serious about the environment. So nickel is going to diverge. This is a prediction for you. I bet you nickel is going to end up being a multi-price commodity. Okay, where there's laterite and sulfite nickel differentiation. Okay, maybe there's green nickel and dirty nickel.
Sure.
Okay, like a pig iron or something like this type of thing for nickel. So, because right now there's one cash nickel contract in London that's quoted, and it's not really accurate because nickel for stainless steel and nickel for batteries is two different types of nickel. And so I bet you as we get into this and demand ramps up, two predictions for you. One, you have different prices, and two, somebody like an Elon Musk is going to go out there and is going to say, I'm just going to have to go into the nickel mining business.
Yeah.
Imagine that. And then what would the market reaction be if he said, I'm just going to fund this thing?
Yeah.
I mean, you're talking a couple $1 billion. I mean, Tesla, they can raise that, no problem. So we're out on a limb here, Jay, but I mean, I don't think it's that far-fetched.
I don't think so either. Yeah, more vertical integration like that. I think you're right on the money, to be honest, DB. Okay, look, I know you're pressed for time. Really appreciate you coming on and sharing your insight. It's great to connect with you. Let's do it again soon.
Let's do it again. I'll leave you with one thing. We go into 2021. We go into Joe Biden's presidency with a weak dollar. Let's give you a few predictions. $2,500 gold, $40 silver, $10 nickel, let's say $4 copper. All right? So as we get into next year, give it some time. But as we get into next year, let's revisit and let's see how those worked out. And remember, I'm playing it with Metallo Royalty, MTA, for the gold and silver. I'm playing it with Nova Royalty, NOVR, for the copper and nickel. That's how I like to do it. In my book, Why Gold, Why Now, I explain how we built these companies, why we built them, what a royalty is, how a royalty works. I tell the story of Franco is a great way to learn about the royalty business, and people can see from the inside, what we were thinking when we did that. So as we get into 2021, let's revisit this and see if that was good advice.
100%. Let's do it. And I'm actually talking to Alex Tsukernik next, so I'm looking forward to it.
Great.
Okay. Thanks again, EB.
Okay.
Okay, my next guest is Alex Tsukernik, the CEO of Nova Royalty, a royalty company focused on the copper and nickel business. What's up, guys? Jay Martin here, CEO of Cambridge House, and I am now joined by Alex Tsukernik, CEO of Nova Royalty. Alex, welcome back.
Thank you very much. Always great to be here, Jay.
Good. I'm excited to catch up with you again. Right now we're taking a hard look at the renewable space. I've become very bullish, and I've decided that the best way to play this market, for me anyways, is to look at what I believe to be the most sustainable and predictable commodities / ingredients. Fueling this, that lands me at copper and nickel, which is why I like Nova Royalty so much. Before we get into Nova, and I'd like to get an update on the story since the last time I had you on, but I want to touch on broad market renewable energy first, Alex, because I know that was your inspiration to launch Nova. Now, there's a number of factors you could point to that are driving an appreciating copper price. And renewables is probably my top pick. From your standpoint, Alex, do you ever get pushback though? Because I know you're very bullish on renewables, right? As am I, but timing is more of a question mark in my mind. So do you ever get pushback from prospective shareholders who say, yes, you're right to be bullish on renewables, but I still think you're 10 years too early?
Look, it's a good question. Yeah, we're not so much bullish on renewables. We simply see renewables as the main power source for the world going forward. So I suppose that qualifies as bullish, but I mean, I always think of bullish as sort of a temporary view. I'm bullish today, I'm bearish tomorrow. Like we saw something so strong and fundamental happening, before we started Nova, that we decided to really focus on this, and I was to devote, in my case, 100% of my time on this. So it's something where, what we see right now is a car will simply be electric, in the not too distant future. What we see as the grid and power to heat our homes and businesses and the like will be done via dominantly renewables, which is wind and solar. And so I think very few people I think we've met feel like this is not something that's going to be important. But I would say also very few people we've met really see the extent to which we think it's going to. So I think we're still very early days, and the adoption cycle. I mean, wind and solar account for what I think 4% of U.S. energy.
Okay,
that's a super small number. You know, I mean, so although a fair amount of money has been invested, I think at least in nominal terms, we're still at the baby stage, you know, relatively speaking, in terms of where this is. So we see this just becoming mainstream.
Yeah, that's an interesting comment you made about those two separations. You can be bullish on renewables, but still not really understand the full spectrum mainstream adoption and what that means. And to that point, the majority of copper forecasts I see seem to reference the same thing: Tesla's sedan production. And that's kind of where it ends, right? When they talk about forecasting copper demand, right? It's relatable, you know, we can wrap our minds around that. But yes, it's like a percent of what it means to electrify the planet. It's hard to wrap your mind around because my entire life, you know, it's been the petrodollar. Oil has been the most important commodity on the planet. It's an important commodity today. It's going to be important for the rest of my life. Doesn't make it a growth industry. And so I guess when you look at renewable progress, Alex, what countries are leading the way right now?
I think maybe before I answer that question, there's a very tempting sort of thing to think of renewables and electric energy as an economic movement. But that's not what we saw sort of in 2017, 2018, when we're putting NOVA together. It's a change in sentiment and change in values that is, I think, emotional more than anything else. You know, and I think it's a realization among a critical part of the population that it's climate related, it's environment related, it's a lot of things related, that we simply cannot continue the way we were. And I think you're seeing this across the board around the world. You know, whether that's the Paris Agreement, whether that's China, which is arguably the leader in renewable energy. India, it's everywhere. So, you know, we're in the middle of a change in values, I think, in terms of how people want to live and what kind of, sort of how they want to use the resources of the planet going forward. And that's manifesting itself in wind and solar. Yeah, so I really do think that this is not something that's just a purely economic idea. You know, I grew up, you know, born actually in the former Soviet Union. And, you know, I was 11 when we left just before the whole thing cratered. And what you saw there was a change in values. People just didn't want to do this anymore. And it collapsed from within. And what I see here is similar. People don't want to live the way they've lived. They want to live differently. So the idea of fossil fuels, I mean, I see a lot of these forecasts. So substitution is not going to be as quick as you think. We don't know how quick it's going to be, but the idea that it's not going to happen, I think we're past that. You know, so you're in the middle of fundamental change, and the world has reached this no mas moment. They just don't want to do this anymore, and you see it in every country at this point. And you see it not just in people in the streets or newspapers, you see it at the government levels. You see it in the Chinese Communist Party. Mm. You see it in the United States. You see it in Europe. I mean, you see it everywhere. So we're in for a very, very long haul here in terms of the whole thing changing.
Right. Okay. Now, that actually reminds me when I don't know if this is when you received, call it the inspiration to start NOVA. You were at a conference. You were listening to representatives from the Chinese government talk about commodities they were after a decade earlier versus what they're after today. And was that the spark? And maybe recap that for us and then follow up. Was that the spark that made you decide NOVA's got to go right now?
Well, the thing is, it was building kind of, I saw things happening, you know, in terms of people talking about green energy and green demand and the like. And, you know, but I've never been the person that sort of jumps on something on the so-called new thing. That's completely just contrary to how I've done everything. But what I saw kind of when that gentleman from the Chinese government did come up on the stage, I saw that what was happening sort of as a thought or an idea had now made its way into primary policy of, in general, what's been a very conservative, thoughtful body, which is the Chinese Communist Party. And so I think there was, what I saw was that this is something that was becoming a tool of people that are generally rational. And so at that point, kind of that shift was beginning to really make sense in my head, so we didn't want to start Nova to be sort of a topical company. We wanted to start a company that would be really a mainstream company for what was happening. And if you look at what we've bought so far, we've bought really royalties in some of the most prominent nickel development projects in the world. We didn't want to be just sort of riding a leverage game. We wanted to buy the best things possible. So we really saw and see a wholesale substitution. And I think that, that conference probably helped in the formation of that process, but it was happening long before, to be honest.
Right. Okay. Now, Nova, so, copper nickel royalty play, you're purchasing third-party royalties, focusing on the biggest projects. Right now, you kind of got the first mover advantage. I expect that to change, right? If you look at the abundance of companies in the gold, silver space,
no doubt.
There's probably a number of business models hot on your tail. How soon do you think that landscape will change, and how is Nova going to stay competitive when you have competitors?
Listen, whether you have competitors or you don't, it doesn't really matter. Everything comes down to how thoroughly do you think about your business? How do you evaluate quality? How do you evaluate risk? And whether you give people, I think when you transact with a royalty owner, especially because we've been successful even at the early stage, getting people to take shares in the company, it's how much can you convince them to really be a part of the company for the future? Because that's on the management team and how it thinks about its business and the value it can create and the like. We've been very successful so far, I think, for our shareholders. I think investors from our first round are up about 10 times or something like that. And I think we just, we don't just jump into things. If you look at what we've bought so far, it's been very targeted. Every project we've bought in 2020, which has really been, I think, our year of growth, it's been owned by a major operator. I think we've had very good pricing discipline in terms of kind of what makes sense and what doesn't. And I expect that in the future, people will want to be a part of the story. I think we built a company, I think, that will be here for the long haul. We expect to be a part of this copper and nickel space for a very long time. So we're really excited to be here. Will there be competitors? Will pricing get aggressive in some cases? Sure. Well, in that case, you probably just have to walk away if you feel that something doesn't make sense for you, or if it's something that you really want, you figure out how to be flexible and get it done, but in ways that really make sense to you. I mean, nothing is worth going crazy and losing your discipline for. But in every industry, if you look at all successful companies, they all go through these stages. If you have the first mover, maybe you go a little faster in the beginning, the people come in, maybe you have to be a bit more careful. Then these people inevitably come out because they overreached, and then the playing field is open again. So I think you just kind of try to figure out where the wins are and kind of do the best you can, but nothing really changes for us, Jay, to be honest.
It's, that's been like the underlying style that I've noticed with you since we met. When I ask you questions like, Alex, what can shareholders expect in the next 12 months? You kind of throw your hands up and say, I'm not worried about 12 months. We're talking decades here. You're a very long-term thinker. I've noticed that about you. Not to say you're not worried about what's happening next quarter and the following quarter, but I have noticed you take a very high-level vision to Nova. But Alex, for anybody who hasn't watched, our previous interview or I do want to just open the door on the business model a little bit. If you purchase a share in Nova Royalty, what are you purchasing?
I think, listen, more than anything, you're buying the management team. And because we started this company, after their first capital raise, we raised $2.6 million and we spent $2 million in cash for our first acquisition, which was a Dumont royalty. So we did like $600,000 or so. And, we really did our work in the universe and figured out what are the logical next steps to build the company we wanted to build. And I think you saw the results manifested in 2020, which I think has been a really exciting year of growth. And I think now it's a really unique portfolio of assets, because when you look at what we have so far, there's not a lot of development projects that are being pushed forward by major companies. So we have Taka Taka, which is really First Quantum's next major priority. Once the company is delivered, then Cobre Panama is fully built. We have Nueva Union, which is Tech Newmont's major priority once Tech finishes Quebrada Blanca. And we have Twin Metals, which is Antofagasta's main project outside of Chile. We have Janus Lake, which is Rio Tinto's arguably most aggressive project in North America right now on the exploration side. And we have our initial acquisition, the Dumont project, which is the second largest nickel reserve in the world. And I think given that everything that's happening with nickel demand, I don't think there's a more advanced nickel project in North America right now. Mm-hmm. So, we've been, I think, very thoughtful about what we've bought. And I think we understand how this fits into the overall space. Right now, an investor cannot get exposure to this part of the world through, I think, any other vehicle like this, because we have no risk remaining. We have no more capital commitments, kind of once we acquire the royalties. So you get perpetual benefits from some of the most important ore bodies in these segments, run by serious people who have the capital and the expertise to actually make it work. And we're going to keep growing the company with the same focus. So I think more than anything, they really get kind of the team and kind of how responsibly it approaches its business and kind of where it fits in. And I think the asset portfolio, just from what we've done to date, is really unique. Because there's a handful of development projects out there that are actually on their way. What we've spent a lot of time thinking about, working through and thinking about, and I think we want to educate people on now, is the so-called copper pipeline is not a pipeline in the same way you think about in terms of gold or any other commodity where it's quicker. The things that are currently being advanced are 5-7 year timeframes. Things that are not yet on the board, we're talking decades.
Yeah.
So if you want to get exposure to sort of really the best projects, there's not a ton of them. And especially in one vehicle, which is focused and dedicated to this thesis. So I do think it's already a very, very cool and unique portfolio that we have. And look, we've got a lot more happening right now. So we'd love to add more to it in a way that makes sense.
Right. Yeah. You referenced some of the biggest names: First Quantum, Tech Newmont, Antofagasta, Rio Tinto. For anybody, Alex, who's not familiar with the royalty space, just dive into one of these for a little bit and walk us through the details. What are you receiving from Rio Tinto? Well,
Rio Tinto, in that case, we bought an exploration project. We don't usually buy exploration royalties, but there are situations where it does make sense. And this was one of those unique cases where you have a major company which is very hungry for copper. If you see, Rio's entire focus at this point has shifted to copper. They have a project in Australia called Winu, which is a new discovery, and they just discovered a couple of years ago. Now they're talking about putting into production, and this will be the smallest mine they've ever put into production, really as a first shot, just because they're so eager to get something going in the commodity. And then in Janus Lake, we saw something that could potentially fit the same thesis. This is Saskatchewan, very mining-friendly jurisdiction, right in the infrastructure, big camp. It's over 50 kilometers. And Rio is systematically going literally kilometer by kilometer in mapping, sampling, drilling. So they've already done, before we bought it, they had done one drilling campaign, which was 2019. And they uncovered several large zones of mineralization. So your mineralization was already 8 kilometers long in terms of strike length. So we thought to ourselves, well, look, if this is what's happening, and they followed that up, they built a big camp, 50-person camp, and it looks like they're in it for a couple of years. Judging by their actions so far, we thought, this is something that continues going that in the way that it could be a truly rare special asset, because if it's something in a developed market with such a big mineralization scope and a large company, this is one of those assets could become the next major mine. So when we see something like that, we absolutely get very focused in seeing what is the reasonable way to bring it in the portfolio. And then we we spoke with a prospect generator who had the royalty, which was Transition Metals. And we did what I think was a very good deal for both of us. We picked up half of their royalty position, and for a combination of cash and shares. So they got a chance to monetize some of their prior work through us. And they're obviously very liquidity sensitive, but they also wanted to ride the upside of what Nova was doing. So they took a meaningful share position, which has done very well for them. And and then we have a right of first refusal on the remaining part of the royalty, which they hold. So once in a while, we go into situations like this, which have a chance to be something unique and special. More often than not, we'll go after things like what we did with Taka Taka, which was First Quantum's asset in Argentina. Now, Taka Taka has already got, the resource, I think, is over 13 million tons. And they just came up, and that was when 13 million tons of copper, which would make it one of the larger copper inventories in the world. It's located actually in the same trend as Escondida, which is the world's biggest copper mine. So Taka Taka is located 90 kilometers east, just across the border from Chile. Same geological trend, same region, effectively. And when you Google Taka Taka, it makes your due diligence a little bit simpler. It's just if you Google the Great Taka Taka project, you'll come up, because it's just an absolutely massive amount of metal, and it's not even done growing. So when we bought it, the theory was that there wasn't much happening at the project because First Quantum was busy. But our view on this was, how can a project this big be ignored? It just doesn't make sense. And they already bought it. And then just by sheer chance, our acquisition closed on a Friday, on November 27th. We put out a press release November 30th that we had closed it. That same morning, Jay, First Quantum put out their maiden reserve in Taka Taka with a timeline for a production decision, 2023, 2020. So it's one of those things when you understand what you're looking for and you understand what the source of value in this business, sometimes you get lucky this way, where sometimes things coincide. But I think the view we took was that the project was so strong technically. It's in a great place in Argentina, in Salta province, arguably the best place in Argentina for a mining company. They understand mining. They understand the industry, the process. So definitely not kind of what I think people often associate with Argentina, unfortunately.
Yeah.
And so I think we were really excited when we got it, and then obviously we got some good news. So now there's at least some reasonable pathway to this thing producing. And once it produces, it's going to probably go into the 22nd century, more likely than not.
Okay.
Because these.
Yeah, that actually leads into, I want to think forward with you a little bit, Alex, and I want you to speak to the retail shareholder, or prospective shareholder, for a second here. I understand how the retail investor mind works, because I am one. I want to know how I'm going to make money, and so I want to give you the opportunity to touch on trigger points within Nova Royalty. For an investor that purchases today, what are the trigger points that we could look forward to that's going to create that rise in appreciation in share price for us?
Well, look, here's kind of how we think about a business, and I think I trust the intelligence of the audience here. When we buy these royalties and big assets, you're not paying for all the value that will come forward in the future, because these things always expand. The most beautiful thing about these royalties, these assets, is they're so large, they always grow a lot bigger over time. So, for instance, your average copper mine right now in the top 60 is the average forecast life is 77 years, which is probably still conservative. But most of them don't start out with mine plans of more than 20, 30 years. So typically we'll pay for some version of that 2030, and we're not going to buy at net asset value either, because these things aren't producing yet. So you're buying, I think, at some reasonable fraction of that net asset value. And kind of what you're not paying for, and what's not captured in there, is obviously the capacity expansions, which happen almost automatically with things like that in the mine life, and obviously the commodity prices as well. Because kind of you're valuing these things based on, say, copper staying at $3, $3.25 through, right now our corporate model already runs out to 2068. That's how long we're forecasting revenues for in some of our stuff. Chances are copper is not going to stay at $3, $3.25 for 2068. I think if you just look at the history of commodity prices, like especially given a strategic role. So I think what you buy with Nova really is a very, what's the best way to say it? I would say it's a very easy way to own the upside of the most strategic deposits that the world is going to need. And then you can sort of run your numbers on that and figure out what's reasonable. But if you look at the history of kind of how these things have functioned before, similar mines, I think there's going to be a multiple of cash flows that whatever is relative to whatever is being forecast today. And the company has no capital commitments. It's not as if we have to go build the mines ourselves. We've bet basically on the world's best mining companies to do that. So it's really, I think, from a risk perspective, as good a situation as you can have, because there's no more risk to be taken in terms of capital commitment. At this point, you've bet on the deposit quality and the operator quality, and you just let it happen. And then obviously we're going to be adding more selectively to the portfolio to make sure it's even stronger.
Okay. Thank you for that. Yeah. And, just because I always like to touch on the people, I want to wrap up by just mentioning what initially turned my head to Nova was the shareholder base. Alex has attracted capital from some of the smartest people in the business, from Adrian Day, Peter Schiff, E.B. Tucker, Doug Casey. It's quite a rock star lineup of early shareholders. That's what I pay the most attention to, is who's in the deal, either as a CEO, as a director, or as a shareholder. That's the first step of my diligence every single time. Alex, it's been awesome having you back on and getting an update from you. I'd like to do it again soon.
Absolutely. My pleasure. Thank you, Jay.
If you are just tuning in, my name is Jay Martin. I'm an investor and the CEO of Cambridge House International. Everything I do on this channel, I do in the pursuit of improving the performance of my portfolio. Today, we're doing a deep dive into the renewable energy sector with the guidance of individuals like Ross Beaty, founder of Altera Power, a renewable energy company that he built from scratch and sold for $1.1 billion to INNERGEX. Ross is also the founder of Pan American Silver Corp and the founder of Equinox Gold, both of which he's still the chairman today. We're joined by Frank Holmes, CEO of US Global Investors, and in my opinion, one of the top guys when it comes to understanding the growing China demand. E.B. Tucker, founder of KSIR Capital Management, and E.B. actually authored the KSIR report on behalf of the legendary Doug Casey. I am also joined by a few public company CEOs that are on my short list for my next investment. I hope you enjoy this. Okay, it is my grand pleasure to introduce my next guest. He is, without question, the Michael Jordan of the resource business. And of course, I'm talking about Ross Beaty. Now, Ross has founded 15 companies in his career as a resource entrepreneur, all successful, over a dozen of which have delivered 10x returns for his shareholders. Ross is the founder and current chairman of Pan American Silver Corp, the founder and current chairman of Equinox Gold. But the reason I wanted Ross on this feature is because Ross founded Altera Power Corp, a renewable energy company that he built from scratch up to a $1.1 billion exit to INNERGEX. So Ross has been in the trenches in this business and had a front row seat to the unique challenges this sector faces. Now, although Ross is a mining entrepreneur, he is very, very focused on environment conservation, and he puts his money where his mouth is. Ross is the founder and the president of the Sitka Foundation. He's the patron of the Beaty Biodiversity Center at UBC, the director of several NGOs over the years, including the Pacific Salmon Foundation and Panthera. He's the chair of the BC Parks Foundation, the winner of Vancouver Aquarium's North Medal for Ocean Conservation, and Ross is a recipient of the Order of Canada. I love talking to Ross. This was a very inspiring conversation, and I really hope you enjoy it. In preparing for this interview, I read an interview that you did in 2015. I think it was at our show in Vancouver with a company, and at that point you had said, I've started 14 companies and 13 had been a success. And that 14th outlier at that time in 2015 was Altera Power, which was formerly Magma Energy. And obviously that story has changed. You sold Altera Power to INNERGEX for $1.1 billion. The shareholders all got a very nice premium, and that had a fantastic ending. But I want to go back to that a little bit, and maybe even to the start of Altera. because I'm more curious today about the renewable energy sector and the future there. And so going back to when you founded Magma, what was the inspiration, Ross? Because when you look at your career of mining companies, Altera is the outlier.
Yeah, I mean, it is and it isn't, to be honest. So I was sitting around in 2008, and as you well know, Jay, I'm a pretty hardcore greenie. I'm a passionate environmentalist. I think that the planet is being hammered too hard by the human footprint, and it needs to be protected. So that's kind of what I'm doing with my philanthropic world. And I also wanted to do something in the business world like that. So in 2008, I'd sold a couple of copper companies, had done pretty well. I'd started 11 or 12 companies by that point, or 13, I kind of forget the number. I just, it was kind of like, what do you do different if you do another resource company? But I thought, maybe I can train my mind and apply my experience to resource development in the geothermal power business. Geothermal power is electricity that comes from the earth, hot water from the earth, and it's a resource, underground resource. So you're doing a lot of geology, you're doing drilling, you're doing construction finance, permitting, all of that stuff, and you're doing operation. And all of that is similar to mining. You need social license, you need environmental protection, you need all that sort of stuff. So I thought, this is kind of like the mining game, but it's selling electricity. So I went rah-rah, read everything I could about geothermal power, became a world expert, knowing almost nothing. But that means I was a big promoter. I'd had a great track record, so I could raise lots of money. And of course, what happened? The classic happens. I realized what I didn't know, and that it was really a very difficult business. And I realized that fairly quickly. We blew through about $80 or $90 million drilling, dry holes in what should have been fabulous geothermal sites. And I realized that the business suffered from the worst combination. The sun has just gone behind a cloud in front of me here. Worst combination of high risk, low return. I mean, precisely opposite what you really want to get in a public company. You want to have high return and low risk. And this had high risk and low return. So, after all this work, I mean, we bought a big business in Iceland. We ended up producing 10% of Iceland's electricity. We had another business operating plant in Nevada. But on the whole, I just found it too tough a business, too risky, and not enough return. And we were small. And the trick in the whole renewable energy business is very different than mining. The trick there is it's all about cost of capital. If you have a high cost of capital, you're dead. If you have a low cost of capital, you're in really great business, because largely it's all about finance. It's all about borrowing money to run these long-term predictable cash flows. So I said, okay, geothermal is no good, but I still want to build a renewable energy company because I want to do what I can to get the world off fossil fuel-based electricity. I want to try to, clean up the environment a little bit, do what I can, and make some money for shareholders. And the biggest shareholder is my foundation. So most of my shares in Altera were held by my foundation, Sitka. And if we did well in Altera, doing good for the earth, we would do well for the foundation, and the foundation would have a lot more money to give away to environmental causes. So that's exactly what we did, and it worked out pretty well. Oh, I don't know if you can see that, but it's really bright out there. So that's what we did. So I joined with another company. I bought another company that had wind and hydropower. And then over time, over the next sort of 8 or 9 years, we scaled up. And every time we acquired a new project or built something new, we built a ton of wind farms in the US. We got more hydro operations in BC. We got a lower cost of capital. So by virtue of getting bigger, you make more money. It's just a straight line. Scale is really important in the business. And ultimately, we got big enough so that the INNERGEX, which is a Montreal-based company doing exactly what we were doing in Altera, just a little bit bigger, they said, here's the proposition. Join with us. We're going to have a lower cost of capital with your assets, your growth plans, some of your team, and we're going to be able to merge the two companies and make 1 and 1 3. And that's exactly what's happened. I think INNERGEX was, I don't know, $12 or $13 a share when they took over Altera for 80 cents. Now they're $25 or $26 a share. And if you kept all your stock, you actually would have done really, really well, even with the original Magma investment that you had all the way along. It's trading at record highs right now, so it would have been a good proposition if you'd kept your stock.
Got it. Now, yeah, I always assumed, because I know what active environmentalist you are. We touched on some of the affiliations
earlier and assume that was part of the inspiration behind building a clean energy company. Now, when you step back, Ross, having been through it, I mean, you built the company, overcame the hurdles and got the exit. And now this company is producing clean energy and will be for the rest of your life. Like, what an amazing legacy to leave behind the rest of my life, And, but when you look at the industry from a high level, like, are you optimistic, Ross, about on a global scale transitioning away from fossil fuels to renewable energy?
Oh, God, absolutely, Jay. I mean, goodness. I go back to when you get into these businesses and you're actually trying to build a company, you really do understand the game after a while. And so I feel I really do understand the renewable energy game pretty much, in detail, especially wind power, hydropower, solar power, and geothermal power. Those are the four classic true clean energy renewable businesses. Just in 10 years, I mean, you've seen this real revolution of renewable energy. It's just nothing short of a revolution. At the first, we had a couple of small solar businesses in Ontario. For example, we needed 40 cents a kilowatt hour to make money. Today, 10 years later, they're bidding these big solar projects in Ontario, which is not exactly a sunny spot typically, for 4 or 5 cents a kilowatt hour, and companies are making money. So, the cost of this stuff's come down, the scale has gone up, a lot more operators, a lot less risk. There's a lot more energy finance in this business now. Everybody wants it. Governments wants it. They hardly even need subsidies anymore. I mean, originally there were subsidies, feed-in tariffs, and the U.S. had all kinds of subsidies. Those are by and large gone because the industry now can compete against any other type of power generation on a level playing field. And the cost of solar and wind in many, many places, not everywhere, but in many places, is lower than any other form of electricity. And that's why you're seeing coal plants getting phased out of business. Oil, of course, hasn't been competitive for years. And even gas plants now, which has been the go-to baseload power source, gas plants are now hardly competitive against solar and wind with the latest revolution, which is storage batteries. So what we're doing now in INNERGEX, and we just won the 4 contracts in Hawaii, which has been traditionally a diesel power island. We are now pairing wind and solar power with large-scale battery storage, and we're delivering effectively baseload power to Hawaii. And we're doing it for, I think we're getting in Hawaii, we're getting 8 or 9 cents a kilowatt hour, something like that. And yet, if you're doing this with diesel, it's closer to 16 or 20 cents. So Hawaii's winning, we're winning, everybody's winning. The climate and the planet is winning. So for sure, most places, this revolution is just dropping costs, making renewable energy more competitive as an industry. And you're seeing that transition. Literally, we're in the takeoff sector now, or takeoff space of that, when you have that exponential curve. It starts flat for a long time, then it gets a little steeper, then all of a sudden, whoosh, you get takeoff. We're right in the sort of the curve of that right now, heading vertical. And everywhere in the world, I mean, if you go to China, you see wind farms as far as the eye can see. If you go to Saudi Arabia, now they're building these humongous, Saudi, Abu Dhabi, Dubai, Morocco, Algeria, all over the Sahara, they're building these humongous, 5 or 6,000 megawatt solar projects. It just defies imagination to see how big these things are. We just built a 300 megawatt solar farm in the heart of frack country in Texas, at Permian, Texas, in the Permian Basin. And it's kind of funny to see all these pump jacks pumping away on these frack oil fields, and this huge solar plant right next door that's actually producing power and electricity more competitively than the gas and oil fields will. So, it's a real revolution, and for me, it has been a thrilling, very enjoyable ride, as long as you can sort of say to shareholders at the end of the day, you're making them a buck as well.
Right. Right. And it's so inspiring, because I wanted to ask you, if it was a 9-inning game, where are we when it comes to the renewable energy transition?
Oh, we're 3rd inning.
Right.
3rd inning. Yeah.
I mean,
and then, there's winners and losers in all this, right? I mean, obviously coal's forget it, coal. It's just, the thermal coal business is gone. But, unfortunately, people kind of criticize me because I often say uranium's dead as well. I mean, I like uranium. There's nothing wrong with uranium. It's a perfectly clean source of electricity, but it's expensive. To build a nuclear reactor is horrendously expensive, and it's got all manner of legacy issues with radioactivity that happens.
Right.
And then you got to mine the stuff, and you got to transport it, and it's just a a high-cost business. And yes, it produces base load clean energy, and in some places that's great. In some places that's the only kind of electricity that really works.
Sure.
But man, it's just not competitive anymore against wind and solar. Wind and solar are taking over the world. We don't really have any more potential of any consequence for geothermal or hydro. There's a few places left, but not many. So it's really the story is wind and solar, and there's plenty of wind and solar in the world that'll be able to replace all existing power ultimately. Just has to be built. That's
very exciting. Now, so what I love doing, Ross, is sort of affirming or I guess disputing, and I'm aligned with you. Like this is kind of the dream, right? Is what I want to see during my lifetime is a expeditious transition to renewable energy, right? So
it'll happen. It's happening.
And so now the small cap investor in me wants to ask, how do you play this? Because I'm not going to buy Tesla or Solar City. What are the ingredients? And we know copper, nickel, lithium, but getting a bit more granular, Ross, how could one participate at the ground floor in this third inning?
Right. The two ways, well, there's several ways to play it. The first is the kind of classic, you buy the utilities, you buy the renewable energy businesses, but you got to go to the bigger ones, unfortunately. I mean, you could go to smaller ones, but they're risky. It's the old story. It's the junior risk, major not risk, but not as much return. There's all that risk reward ratio you've got to play there. But by and large, utilities is one easy way to play it. And most of the utilities this year, for example, have had a really good year. In fact, that's why COVID for me has been, on the investment side, it's been terrible for an awful lot of people and friends of mine. But then on the investment side, my two businesses have been renewable energy and precious metals. Yeah. And both of them have been among the top performers of the year. So, right. It's been a good year from that standpoint. So the larger renewable energy businesses like INNERGEX, there's a small handful in Canada, there's a bunch in Europe, a bunch in the States. That's one way. The second way is to buy, you would just call it the clean tech sector. And there's a whole pile of industries, companies that are building neat things that are going to use less electricity or are going to economize on part of the energy transition, better transmission lines, better storage batteries, better pumps, better refrigerators, all kinds of things. And there's lots and lots of ways to play that game in what you call the clean tech sector. And you'll have to ask a investment advisor for names in that business. And then the third way, of course, in our business is to look at the metals that are being used in this revolution. Because the revolution isn't only generation of electricity, which is where the renewable power companies come in. It's also about generation, transmission, and end use. And part of that big end use revolution, of course, is electric transportation. But it's much more than just electric transportation, as I just said. And you can look at every single part of that whole spectrum of energy use, and the revolution is creating bigger demand for certain metals and less demand for others. Right. So you can kind of look at, well, what metals are the ones that are being in greater demand here? And if you'd got into the lithium game, 15 years ago or 10 years ago, even, you'd have done pretty well. But then, of course, when you actually look at each metal, it's different. So lithium is different than cobalt, is different than copper, is different than nickel, aluminum. Like just about every metal is important in this energy transition, but some more than others. Cobalt, for example, I actually tried to build a company a couple of years ago looking at cobalt as the best possible high density energy storage battery. Used a lot of cobalt. Tesla, originally all the Tesla batteries were very high cobalt. But what turns out? It turns out there's not enough cobalt in the world. It's just a metal that's rare. It's a byproduct, and it occurs in one big troublesome place, DRC. Friedland can go there all he wants. He's there, so he has to talk it up. It's a tough place. I mean, just to be generous, it's a tough place. So and there's not much cobalt anywhere else in the world. There just isn't enough cobalt to feed the demand that would come if cobalt batteries were to be broadly accepted. So forget cobalt. Lithium. There turns out to be a ton of lithium. Lithium's everywhere. It's all over the world. And that's a great thing because, lithium batteries are the best form of electricity storage batteries right now. They're fantastic. And the good thing is there's lots of lithium. The bad thing is, lithium price isn't going to move very much because there's lots of lithium. Even if demand goes up, there's lots of lithium, which is, a good thing. Vanadium is something we're working on. We've got a little company called Strategic Resources. We're looking at vanadium as a flow battery, a large-scale storage battery. might work, it might not work. You know, it's expensive. That's the big problem. INNERGEX just partnered with Hydro-Quebec and announced today, in fact, that they're involved in a new kind of large-scale storage battery, which is based on a lithium iron phosphate chemistry, which are relatively cheap metals. And that's one of the strong points about that kind of large-scale battery, is it's based on relatively available, relatively cheap metals. There's all manner of chemistries. There's sulfur, there's silver, there's, you know, so you know, do your research, make your opinion, and then look at the metals that are likely to be in favor. They're going to be winners. It's a little difficult and it's a little risky right now, but like I said, take a handful.
Sure.
You know, be diversified. That's the secret to sort of minimizing risk. And then there's the big metals like nickel and copper. Well,
right.
Nickel is kind of a core part of many batteries, not all. But copper, the reason copper is in the limelight right now, and there's zinc batteries as well. Zinc's got a potential, you know, tremendous future from just the battery side alone. But looking at copper, you know, the use of copper in the whole transition, energy transition right now, right from generation to transmission to end use in motors, copper is used everywhere in larger amounts than in traditional fossil fuel-based power systems and transportation systems. So copper is going to be a winner, hands down. And that's the easiest prediction to make. Copper and lithium are going to be winners, hands down. I suspect the copper price will outperform the lithium price because there's not quite as much supply, although there's lots of copper supply too. And so that's a third way to play the business. You know, getting into the metals game. You know, buying explorers, buying developers, with all the risk that entails, as you well know.
Right. Yeah. Well, I'm so glad that you touched on that, because you know, I feel like I've watched hype cycles in the renewable energy sector emerge and retract a couple of times, typically on the back of some obscure rare earth metal. And I mean, it's only natural that renewable energy technology is still relatively new. Therefore, it's going to go through pivots in order to find its way into the mainstream. And your cobalt example is a perfect example of that, right? Here's a metal that we thought was going to be absolutely necessary, but we have to find a way to work without it. So we do, you know?
For sure.
Whereas, and this is how I want to approach it, copper, it is the foundation metal, right? And probably the most consistently reliable ingredient in this transition.
Yeah, and then there's other you know, revolutions that are happening around us too that you kind of have to look at if you're in the metals business. And one of them is this digital revolution that we're still, you know, 5G. It's just another revolutionary kind of technology group, and it drives demand in ways that we wouldn't have imagined 10 years ago for all sorts of things. And one of the metals in the digital revolution, surprisingly, is silver. You know, silver is used as the best conductor of electricity of all metals. And so we're just seeing silver being used more and more in digital products. And so, you know, 10 or 15 years ago, people said, oh God, silver's dead. It's mostly used in photography. And we're switching from you know, analog or silver halide based photography to digital photography. That's going to kill the silver market.
Right.
On the contrary, it's actually, you know, silver demand has gone through the roof because it's used in every single digital product, in solders and brazing alloys and things like that. So, and of course, in the transition or in the energy revolution that's going on, you know, the number one use of silver today is in photovoltaic cells. It's come from zero like 10 years ago. And all of a sudden we're using almost 100 million ounces of silver a year, which is about 10% of total worldwide silver demand. Mind-boggling. I never would have imagined that. So again, you've got winners and losers.
Right. And now you touched on, you know, the supply issues. It's not an issue. I guess it's great that there's so much lithium. But from an investment standpoint, when you look at the copper sector, Ross, you know, talk to me about the supply. You know, I read a lot about the supply crunch that we believe is coming within the next decade. Do you think that's a very real scenario? I know the capital and time required to build a new copper mine are much more significant than a gold or silver project. But do you have any thoughts on that?
Yeah, I mean, there's actually lots of copper supply. I mean, in my little, you know, adventure in alumina copper, we had 10 big copper deposits we bought in 2002, 2003, and we eventually sort of sold 5 of them, 4 or 5, yeah, 5 of them, I think. And out of those 5, it's interesting. And these were big deposits. These are multi-billion ton, you know, really huge ore bodies. One was in Canada, one was in, 2 were in Peru. 2 were in Chile, one was in Peru, one was in Argentina. 5 big ones. Only one of those is actually being built. and that was a mine in Chile that we sold in 2006. It took 10 years to build. The others haven't even been permitted. I mean, so there's lots of copper out there. Every single major mining company has a large portfolio of large copper deposits in their inventories. But what's happening today is that it's just harder and more expensive, just much more difficult to permit and get social license and regulatory approval to new mine construction and mine development. So what used to take 5 or 8 years, 15 or 20 years ago, and every single one of these deposits is economic today at current copper prices, today takes 20 years to get permitted, if not longer. So that's the big thing that's different today in the mining game. It's just how much there's more people with more money, more entitled, who want to put up roadblocks to development. There's the NIMBY attitude, the banana attitude, and it's really affecting global supply of a lot of things. I mean, we saw was it last week or the week before when the Pebble deposit was shot down in the US? That's if not the largest, it's one of the largest copper gold deposits on the planet. And it would never have been shut down 20 or 30 years ago. But now it's basically dead. I mean, it's just it's the way it is. It's the world we live in. But all of a sudden, poof, that gigantic supply of both copper and silver, copper and gold is gone. So we need to get it somewhere else, and that's where the supply crunch could happen. Is not in exploration, not in discovery. There's lots of copper around. It's getting that copper to market, and it's proving difficult everywhere. Chile, my God, they produce a third of the world's copper. Try building a new copper mine in Chile, and you might as well go and have root canal surgery with no anesthetic. It's just no fun.
Right. Okay. That's good to know, and very aligned with a lot of what I've been reading, just the increasing significance of geopolitical and jurisdictional risk.
Yep.
Okay. Now I want to ask you something, Ross. So, we have a lot of awesome guests on the show, and some of the sort of gurus from the investment space, like Rick Rule.
Yep.
He's got this quote that I love restating on this channel. He told me when I asked him to reflect on his career and the successes and good decisions versus bad decisions he's made, he said, "Look, Jay, it's as simple as this. I would have made 10 times more money and worked a 10th as hard if I'd only stuck with the top 3 or 4 names, of which you're one. Yourself and Lucas Lundin are right up there on the top." And, so I want to put this question to you when you look, because that's what I'm doing now with this channel and with all of our content. My whole thesis is like, just find the winners, find the serially successful, success begets success entrepreneurs, and just follow them around and cut out all the noise. And, we've had guests like Mark O'Day on the show 3 times now, taking my audience along for the ride. And I know he's an entrepreneur that you respect. Anybody else come to mind, Ross, that you want to shout out that you think our audience should pay attention to?
There's lots of guys out there that are smart, hardworking. I mean, that's all it takes. It takes half a brain and a lot of motivation and drive. And that's I'd say, if I had to, identify one characteristic I've got, it's not necessarily being smarter than anyone else. It's just having a huge amount of drive. I don't know why I've got it. I get up early in the morning and go to bed late at night, and I try to build value. It's not rocket science. Ivan Bebek is a super guy. He runs a good ship. There's a whole bunch of them. Mark O'Day is one. There's lots. I'm not going to single out any particular guys, because I'm sort of, I could give you 20 names, but I don't think it's fair to the 10 I don't mention to mention maybe the other 8 or 9. But I don't think there's a shortage of smart people out there. I think investors will find them. It's very important to looking at management. If I think what Rick said was true, but then who are those guys? Like, if I'd known I was going to be one of those, I would have invested in myself even more 25 years ago.
Of course.
So, a lot of this is after the fact. And it's people who are repeatedly lucky the way I've been. I can't put a finger on why that is. I just can't. Like Lucas Lundin, same thing. He is just so successful so many times. And he'd admitted as well as I that we've both been very, very lucky. Friedland, I don't think he's quite in that category, because Friedland just is a work machine. That guy goes hard day and night. He doesn't think or dream or do anything else. He's just devoted to hard work and wealth creation. He's amazing. So, there's, but I can't really speak to other people and how they do things. And I can't even speak to what I've done, to be honest, because it's all kind of happened despite myself. And surprisingly, I'm as sort of shocked as anybody about it all.
That's great. I love that. I'm actually talking to Ivan today, so
oh, good.
Looking
Nice.
forward to that. I always enjoy catching up with him.
Yeah, he's good.
Okay, I want to pivot in the final moments here, just because one thing that's always struck me about yourself as an entrepreneur and is your dedication to, call it, environmental conservation, right? But you put your money where your mouth is, right?
Yeah.
And you're very active on a frequent basis. And so I want to talk about some of the associations, and let's start, you're the founder and president of the Sitka Foundation. I'd love you to educate my audience a little bit on what you guys are up to.
Yeah, sure. Thanks, Jay. I mean, at this stage of my life, it's probably the most important stuff of all. It's great fun making money. It's absolutely wonderful. It's truly, addictive, really. That's why I've started so many companies, because it's just been so much fun and it's all worked out pretty well. And it's great making money for myself, but it's also great making money for a hell of a lot of other people, other shareholders. It's just fun. It's great. Nothing like a few good drill holes. It just gives you a burst of joy and energy, because it represents real wealth creation. So all that's fine and well, and I've done a lot of that in my life, and I've made a huge pile of money, and way more than I ever need. And I don't spend a lot. I like, my greatest source of joy is going camping or kayaking and living on a beach in a tent, cooking my own food, and paddling from A to B the next day with my shoulders. And it's really what I want to do in the next stage of my life as well. I just want to live off the grid and eat and garden and fish and pretty well nothing else. Wow. So because I love nature so much, I decided the next phase of my life is to give all my money away, basically. I don't need a lot. My wife doesn't need a lot. My kids don't need. They're all grown and they're doing well. So, where do you focus? And everybody focuses on different things. Some love, funding schools and hospitals and churches and that stuff. And most money that's given away is over 90% of all philanthropic giving goes to people, things like that. Fair enough. That if you're philanthropic, you're going to go to heaven. You're a good person. And my niche is that 1%, is the environment, because the environment needs protecting. There's tens of millions of species out there that are getting hammered by the human footprint, that don't have voices and that need help. And so I figured my little niche should be the environment. So I started my foundation, and all we do is we give to different groups that are helping protect the environment, preserve biodiversity, fighting climate change, and all that kind of stuff. Because actually, that's, to me, over the long term, that's the best thing I can do for my own kids and my own family. Because if we don't look after our environment, everything else becomes unimportant. If we don't have healthy water, healthy soil, healthy rivers and oceans and air, we have nothing. We're not going to exist. Yeah. And it's those things don't have voices. So it's a very easy thing for me to support, and we're supporting, I think, 75 or 80 different groups right now across Canada, and many global groups, and I'm stepping that up every year. I'm putting more money into the foundation, and it's and by U.S. standards it's small, by Canadian standards it's quite big, and I just hope it's going to be bigger and bigger and more important, because that little 1% can do an awful lot to help the 99% too.
And yeah, no kidding. I love that message. And, so is this between the Sitka Foundation, between the Beaty Biodiversity Center? I'm not sure how involved you are on a regular basis, but I imagine you're relatively hands-on with the other initiatives, Pacific Sound Foundation, Panthera, et cetera. You've said EQUINOX Gold will be your last company. Is this where we'll find Ross Beaty spending his time?
Yeah. Most definitely, it'll be where I spend most of my time. Stay looking out the next 10 years. I'm going to eventually check out, and that I said EQUINOX Gold is it. I'm really trying to go out with a bang. I'm trying to build that into a really big company, an important company, a kind of a globally important company, and so far so good. We're doing a good job. Our management team's strong and our balance sheet's strong. Like, it's a nice time to be in the gold game. And yet, for me, really the last part of my life will be giving away the money I've made into these things that mean a lot to me. It'll also be a time when I want to go and do some big quests that I'm looking forward to. I've got a bunch on my mind. They're all long trips in nature, carrying my life, carrying my world with me, my food, my accommodation, and you know, whether it's in a tent or a bicycle, sorry, whether it's in a backpack or a bicycle or a kayak or a canoe, that's really what I want to do while I still have the health to do it. And so you'll see me doing that more and more in the future.
Very cool. Okay. And we're going to have to wait and see if there's a Michael Jordan return to the game after.
I doubt it very much.
Okay. Look, Ross, I've used up my hour. It's been an absolute pleasure talking with you and having you back on the show. You're such an inspiration. So thank you so much for your time.
I'm surprised an hour's gone by with just this drivel, but anyway, you're very welcome, Jay. Thank you for the honor of asking me to speak to you and your group today. Thank you very much.
Of course. Okay, my next guest is a familiar face if you watch this show, Mr. Ivan Bebek. And the last time Ivan was on this show, he was the executive chairman of Oren Resources. Oren has since split. Ivan today appears as the chairman of Fury Gold Mines, the chairman of Tier 1 Metals, and the CEO of Sombrero Resources. Enjoy. Okay, guys, Jay Martin here, CEO of Cambridge House, and I am joined right now by Ivan Bebek. Ivan, how are you?
Great. Thanks for having me back.
I'm glad to have you back because the last time we had you on, this is going back to June or July, and we were speaking to Ivan Bebek, the executive chairman of Oren Resources. And during that interview, you were alluding to what you were planning to do. And this is the split that you've now executed. And so, you know, at a high level, what's occurred is that anybody who was a shareholder of Oren is now a shareholder of 3 different companies with exciting resource potential at what we believe is the beginning of the next commodities bull market. I think when you look back on this transaction and this split, timing is going to be the most important ingredient. And so I want to talk about timing a little bit, Ivan. You know, you've been through market ups and downs. You've executed well in good markets and bad markets. Most recently. And so what did you see that was different? I mean, because when you founded Oren, I know you had an initial game plan of building Oren and selling it, right? In like a 5-year time horizon. Mm-hmm. But market forces changed and you spotted a bigger opportunity, a bigger vision, and that's the one you hunted down and executed. So talk to me about what you saw and why your vision changed and why you chased down this bigger opportunity.
Sure. You know, it's awesome winning, especially in the middle of a bear market as we did with Caden, and gave us a lot of ability to do more, right? And our game plan with Oren was to go find a world-class discovery, a mine that would rank in the top 20 mines on the planet, right? We raised over $100 million and spent that in that pursuit. And we came up with gold, copper, and silver swings in our portfolio. And we came to a flexion point where we didn't feel we were getting value for all 3 of these assets. So as, you know, large shareholders ourselves, we took a different approach and said, hey, how can we unlock more value, but more importantly, get paid independently per each type of discovery that we have in our portfolio? Because there's no company, Jay, that gets paid for all 3 at once, not on the exploration side anyway, right? Yeah. So when we spoke last, you know, I think after our interview, our share price doubled and it traded extremely well throughout the summer. We came to October 9th, which was the last day of trading. It was still in the 320 range for Oren, which was near a year high and multi-year high at the time. Rightfully so, because we were going to give everybody 3 shares for the shares they had. They've gotten those. There's been some complications with tax and various discount brokerage firms. It's caused some headaches, but I want to assure everyone that, you know, we're helping, we're involving ourselves where needed to mitigate those pains, but the outcome of Fury trading is kind of surprised us a lot to the downside. I mean, there was, you know, market volatility because of the election, and that part we did not plan well. We didn't know it was going to be such an uncertain event. That came into the trading as well as a seasonal low in gold and tax loss selling, which is what we're enduring now. And everything there at Fury points to massive opportunity. I mean, for the assets we have, the fundamental value is trading about half at $1.70, 75 Canadian of where we think we should be before we add an ounce of gold. But I can say that till I'm blue in the face, Jay, and we all know that that works in good markets, but in all markets, drill holes are the most paramount way to perform as a company. And we just started a 50,000 meter drill program. We're hitting structures as we drill where we thought we would. We're really excited about that. And hearing that energy come out of the technical team, it really supports our thesis that Eau Claire, you know, an asset that has, we think, been largely misunderstood or underexplored, could go to a double or triple its current size of 1 million and change ounces of 8 grams per ton, which would be substantial for shareholders. But here's what's happening with Fury. I mean, we have a combination of assets in Canada, geopolitically amazing place. We are only getting value for Eau Claire right now. If you were in one of our 170 Zoom meetings we've done since we've created Fury, you would have heard 80% of our discussions have been about Eau Claire. Rightfully so. There's a real asset there that we think can get a lot bigger and become a mine. Now, on the other assets, Committee Bay, Homestake Ridge, and the Éléonore JV, which you hear about shortly in a press release out of Fury, these assets are not in the share price, and they never were an Orange share price really until we started talking about the final targeting and the drilling, which is going to happen in Q1 of 2021. So the one thing I will say, besides drill results are going to drive the share price, and they're pending now, expected as early as January, and to be continuous, we're going to be drilling 2 types of holes in the portfolio for Fury. The kind of holes that could give investors that 5 to 10 or 20x return. Those are the kind of big discovery holes. So we're drilling one right now for Fury as I speak at Eau Claire. And then the other holes that show steady growth, but coupled really well with a rising bull market in gold. So I think that from a Fury perspective, we've gone through the hard part. We've recalibrated our shareholder base. Some people prefer Peru over Canada. Some people have given up on Committee Bay and Homestake. I most certainly haven't. I like them even more now than I have before, especially with the backdrop of $1,800 gold looking to go to way higher gold prices. I think those are going to be spectacular value injections and speculations in Fury's portfolio. But most importantly, I love the energy coming out of the drill bit. I think we've got Eau Claire right. I think it's going to be massive for Fury as a start. And while we're getting results from those Eau Claire drilling and hitting those kind of home run type of targets, I think you're going to look forward to those targets coming out of Homestake and Committee Bay. So 2 years of every month, investors will get that massive discovery look as a share price performing kind of factor while there's steady growth in that company. So I think the stock is way behind the fundamentals. It's going to enjoy a very, very busy 24 months of continuous news. And for the few people that have been quite critical towards the deal, and I kind of laugh a little bit at this on the newsletter scene, there's been a lot of people slagging us for the deal and talking about low value and stuff. And, they failed to recognize the growth potential through drilling. And the fact that we started a 50,000 meter drill program and we have $20 million roughly in the treasury. We have some incoming capital from different things within the portfolio, but how could you be negative on a company that's starting a 50,000 meter drill program in a high grade gold asset in this gold environment going forward? Either way, it created a lot of opportunity. We've created a lot of new great shareholders. We've had a chance to give liquidity to those who want out and bring some very good long-term shareholders in. At Oren, our biggest strength has been our shareholder base. We are well aligned with that vision of getting that major discovery up north. And now I think we're actually going to see that kind of potential coming out of Eau Claire as well, which we're drilling year round. So incredible start to Fury. On tier 1 and Sombrero, I promised
you know what? I want to interject because I want to talk about Sombrero. This is okay. So just to unpack a few things there that you mentioned, because there was a lot there. And to your comment about why would a newsletter writer waste the energy to hate on criticizing the work other people doing is the easy part, right? Mm-hmm. So everybody who watches this knows I focus on the people above everything else. And when I look at you, Ivan, I see a guy who's generated 500% returns for his shareholders twice before. But what's more exciting, and don't take offense when I see this, I see a guy with a chip on his shoulder who's not done yet, right?
Oh,
you
yeah.
feel like you haven't proven yourself yet, right? And so that's what I want to bet on. And that's why I wanted to have you back on. Now, separating Fury from the split makes sense, especially when you talk about Fury, because now you're you got a pure play gold company in a fantastic jurisdiction, and retail investors like simplicity. Like, I know that because I am one, right? Mm-hmm. When I look at a company, I want a very clear path to how I'm going to make money. And so if you have a company with a gold project, a silver project, and a copper project, it's less clear to me on how that share price is going to perform. With Fury, it's now simpler, right? And we'll get into with tier 1, how that's now simpler. It's the silver play. Very exciting. But Sombrero was always kind of the crown jewel. I mean, when we're talking about Oren, right? It seems to be what people focused on.
Now, so let's dive into the copper sector a little bit, because I know you're very bullish on copper, and I imagine you get some pushback on near-term copper prices and all this stuff. But what are you seeing, Ivan, in the copper market that's driving your bullish sentiment right now?
Overwhelming demand. You know, I think that from the electrification of the planet, I mean, when I entered the business, there was around 4.5 billion on the planet. Now there's closer to 7.5 billion or so people. And when you look at the state of all the buildings and residences, and if you look at the massive push towards a greener planet, which I most certainly fully support, I want cleaner air for my children, their children, for many years to come. You think about electric cars, you think about better, high quality building materials, not so much they're going to involve a lot more copper. They'll all have a mandate of copper because of piping and electrical wires, but more so because a lot of what was built in the baby boomer era in the 50s, 60s, and 70s, it's expiring. And there needs to be a refurbishment to create a more energy efficient society globally, right? You know, look at the Chinese, look what they're doing with electric cars now. They were one of the biggest polluters. And, you know, you made a good comment earlier about, you know, short-term fluctuations and criticism. When COVID hit, and I was at the forefront of talking about Sombrero, you know, my phone and my emails and my text messages of concern on the copper price were incredible. You know, first of all, I look at that as COVID, plus I also look at it as a financial crisis, not too dissimilar from 08, but COVID is the reason why it all came down at once, fine. And I remember when people were saying to me, you know, on the way down, copper's at 208, no one's going to care, you know, your sombreros and this and that. And I had every negative person coming at me. And I looked at the 08 prices of copper, gold, and all the metals, and I saw a deep V-shaped recovery, you know, because there was a lot of stimulus that was injected in the capital on the backside of the takedown of those metal prices and of the economies. And I think that is another proponent that's going to go into what's going to happen here with the copper price. So simplify it. If you have an electric device in your hand, if you're watching me on a laptop, if you want to buy a new house once you make money on copper stocks, you're supporting the copper price. What no one's talking enough about is the paradigm for discovery has changed. All of the easy major deposits in all the geopolitically great places to be have been found. Unless you're navigating some tough geopolitical conditions, or you get the rare opportunity that a vendor hasn't marketed their optioned this property in decades, it's going to be a hell of a lot harder to go find world-class copper discoveries, which makes the copper market 10 times more valuable on a discovery basis than what you saw previously. So copper has been a boring performing metal, but now we all understand it is it's the new oil. As I've said before, copper is the new oil. It is the most important ingredient in everything that's going to grow our planet and make it greener. So think about that, and not just watch it and enjoy it. You can make money off of it by investing into copper companies. Now, personally, I like the 5, 10, 20x return on my investment. I like home runs. And that's why I'm still doing this. You said you have a chip on your shoulder. I do, because I haven't hit, you know, the big enough home run yet, you know, or multiple of them. And I think I have, or I believe strongly that we have the tools, we have the people, and we have the assets to deliver those massive home runs that I've dreamt about as a shareholder since I entered this business. In copper, I think the performance of copper discoveries is going to be outstanding if anyone makes them, because they're so rare to find.
Mm-hmm. Okay. Yeah. And now, you know, I watch a lot of these headlines. I'm not sure how much you let it bother you, or I guess capture your attention, I should say, not bother you, but there's some remarkably bullish forecasts coming out of Goldman Sachs, forecasting 2022 all-time high prices in copper, BHP forecasting demand to double within the next, I think, 20 or 30 years. And the copper business, though, so you touched on some important points there. A lot of investors that invest in copper, they're gold bugs, right? And the copper price starts appreciating, it captures your attention. I can certainly speak to that experience, but the business model is very different, specifically when it comes to the end game. So Ivan, now I'm asking the investor, how should you or anybody approach early stage copper companies? And is there any difference in how you would approach a gold company to a copper company?
Sure, there is a difference, and you're dealing with a much bigger proposition in terms of copper. To find something of consequence, small copper mines won't make you much money, and I could say the same for small gold mines. But sometimes small gold mines are very rich in grade, and you can make a lot of money from those, right? I'd say that if you're gonna look at it as an investor, which I do all the time, size matters, scale. We are competing in our Sombrero project to find something analogous to Las Bambas, which is the 10th largest copper producing mine on the planet. And that's just the first 10% of the land position we've put together, and there's more coming from that land position and some things that you're going to see with Sombrero. My point to every investor is look for size, because all the money is made off of big targets. They take longer, they're tough, and it's been a few years for us trying to get to drill our projects, and it's going to take other people time to get to these big discoveries. But if you get one of these right, Jay, you don't need to buy another mining stock. It's that kind of price return that you could potentially see as an investor, right? And that's what makes it all worthwhile. Size is expensive, but it's worth it. It's the same amount of energy to go find a small deposit as a big one. If you present a copper company to me, my first question to you is, how big is it? And the second question would be, what's the grade? Because that has to be there as well, right? We've seen copper grades, just like gold grades, come down over the last few decades of what mines used to be at. And now we're looking at much higher thresholds, because the quality of these mines is not what it used to be. The better quality ones, the easy ones, predominantly have been found. So I think in that sense, just think big, look for big. If it's not there, find something that's big, align your portfolio with the biggest copper swings out there in the market, and also people that can monetize your investment. There's a lot of people that are very good at the science part of it, or, they're out there trying to do their first thing. And I wish them all the luck, because I was one of those people. But we do weigh heavily on our opportunities. And, we look for something big enough to get global attention, big enough to get major mining companies' attention, and big enough to get portfolio performance attention to compete with some of the larger mines ever found. And that's the kind of ingredients or DNA you should try to look for as an investor. That's certainly what I do.
I think that's really good advice. And, it helps add contrast to the gold versus copper diligence process. That's the differentiator, because you're right. Even a small gold deposit can make sense, especially when you look at the potential suitors, companies that might acquire you. There's junior producers, mid-tier producers, large caps. In the copper business, you're looking at 7, 8 companies that are completing those transactions. And so I think that's great advice for investors to focus on when you're looking at copper. Think scale first. Okay. Now I want to talk a little bit about the Ivan Bebek pipeline, right? We touched on Fury, but we've got a couple other projects to look forward to. So let's jump into that. What can people look forward to next, Ivan?
Okay, great. So tier 1 metals, I've advertised that we were going to add a lot more to it between when it went off the listing in October 9th and went to be an unlisted but fully reporting issuer, and when it resumes trading, which is in February.
Yeah.
We've hit that out of the park behind the scenes, and there's a lot of news pending on tier 1. We have, first of all, we're going to take a world-class silver swing, which we think sits on top of a world-class potential porphyry on a belt of some of the largest mines in Peru that would rank globally in the top 20 copper mines on the planet. And then, as we were not sure of what all this high-grade silver and gold meant that we were sampling, we went hunting for another project just in case tier 1 ended up as a one-hit wonder, which would be great if you hit it. And we now think, after seeing the subsurface results of our work, that there's a massive target there, or a couple big targets there. We went and found something better, or not a better, but something of quality that ranks as the top 3 things our former Newmont technical team has seen in their careers. And they've seen a lot around the globe, right? And I'll say it from this perspective. Tier 1 metals is going to come out the gates with a permit to drill on the silver asset. It's going to drill a silver swing first, and then after the silver, underneath it, we're going to target a big porphyry. And then on the backside of that, we're going to be getting ready to work and drill another major project on the coast of Peru. So, the cool thing about tier 1 is not only did we get into real serious projects, and you'll see a lot of news on that shortly, but we also are on the coast. We don't need a complicated permit as we've been, challenged with at Sombrero. It's quite simple,
Right.
and we're going to be able to get permits and drill continuously. You haven't met the new CEO yet for Tier 1 metals. You will meet him here shortly in Q1 before we resume trading.
Great.
We've chosen somebody that has the integrity and the ambition and the drive, but the strength in the capital markets. And we did this because we're very well outfitted with our technical team, a lot of former Newmont global experts, a former BHP individual just joined us down in Peru. We have some really strong technical personnel in Peru. And then Sean and myself have always been the quarterback of, the DNA of our culture and the performance ambitions of our share price and the corporate decisions of, growing portfolios, buying, selling assets. The gentleman coming in has a very strong capital markets background. And that is something I want everyone to think about real seriously, because that's us thinking about performance on a proper shot to make a discovery. So, we're going to set the company up for success, not just with the drill bit, but for performance in the share price.
Okay. I love that. And you know what, I think we're going to see the conversation around silver beginning to change a little bit. I believe it will. And I say that because most of the conversation that I see when we talk about silver sentiment is tied to the gold price. Here's what gold did. Silver is going to slingshot based off of that relationship, right? And we know that's often the case. I don't put a lot of weight on the gold silver ratio, to be honest with you. Mm-hmm. But the sleeper, and it shouldn't really be a sleeper, but silver is a key ingredient when it comes to renewable energy. If you look at, call it like run of river, nuclear, wind, solar probably has the biggest upside potential. Most growth potential right now, and silver is a key ingredient in solar panels. However, I haven't seen a lot of the silver conversation focused on renewable energy. And when people talk about renewables, they go to copper, nickel, lithium, etc. So that conversation might start to change. Now, touch on Sombrero for us, Ivan. What can we expect from Sombrero in the next year?
So Sombrero has been an amazing swing from the start. And on technical work, we found a big one, and it's been recognized by a lot of third parties, and the rhetoric's amazing. But the challenge there has been getting permits and access to these communities. It's a delicate process, and it's interesting. A very, very good friend of mine, fund manager, asked me the other day. He said, "Hey, Ivan, you have these 3 companies. You chose to be CEO of Sombrero. It obviously is the best one. Should we read into that?" And I said, "You should read into it that it's the most amount of work. It's going to be the toughest one, because there's a very delicate, navigation through the communities. There's been a lot of corporate discussions on Sombrero, and we didn't want to interrupt or change that flow that's been long-term coming. So what you should look forward to us in Q1, you should look forward to some more access agreements that we're going to get. We're trying to change the way we're permitting it so that we can actually have a pipeline to drill 3 different major targets, not the first one that we've advertised. We're also going to showcase a couple more big ones that we found in the land position in the north that we have not yet introduced to the market yet. So Sombrero is going to get better. We're going to have a better path forward with drilling. We're taking on an approach that will give us a chance where once we start drilling, it's a 12-month period to get the full picture versus the multi-year picture and constant permitting headaches and whatnot. And look forward to all of that to daylight before Sombrero comes trading. And in terms of how we put this whole thing together, we wanted to see Tier 1 get better, Sombrero get better before they resume drilling. And those 2 things are happening a lot better than we originally thought they would. And encouragingly, in an environment of metal price performance, the start of the bull, as we've talked about, I think those are going to be really, really strong performing companies for shareholders. And one last comment there on the silver. I'm not sure how much people think about this, but the best performing equity of any metal, it has been predominantly, it's been silver over time. For some reason, trade at double the multiples of gold companies. And so having that in Tier 1 is spectacular. As a mining entrepreneur, I've had 3 different dreams that have come into my fantasy of that chip on my shoulder or making those discoveries. And that's to conquer all 3 metals: gold, copper, and silver. I started as a gold bug. I see the potential for copper prices and copper equities to perform the way gold companies can through a discovery. And I've wanted a home run in silver since I knew about silver and saw some of these silver companies perform the way they do. But again, to the point earlier, size matters. I don't want a small discovery. I want a big one. And I think all of the three of these companies offer that across each one.
I love that. Thank you for sharing that vision, Ivan. That's exciting. Now, before we wrap up, I do want to touch on TORQ Resources. You're the co-founder and co-chair, correct, of
Correct.
TORQ Resources. Just give us a quick update on what we can expect in the near term from TORQ.
So TORQ's, we created this company about a decade ago, and it had the same ambitions of Oren, of Caden, of Keegan. What we did really well there was we were really picky. And all the shareholders who've waited a decade or even the last few years, probably cringing as I say that, but the wait is going to be more than worth it. We just announced the other day that we've hired a world-class exploration team down in Chile. We've chosen Chile as a place to go because of the caliber of copper and gold discoveries of the mines that are being found down there. Copper, #1 producer in the world of copper. Chile's #1. And so it's the land of elephants. You don't go there if there's nothing to acquire. Finding the right people to get you avenue to the right projects is the path. We've tipped our hat there. We've got the people. And the first quarter, you're going to start to see the projects come into it. The only thing that I want people to think about in TORQ is the caliber of things we're going after in Chile are of the same caliber of Sombrero and what we're doing in southern Peru with our tier 1 and Sombrero resources, right? Sean Wallace, my partner, you're going to hear a lot from him in Q1 and onward. He's the executive chairman now of the company. I haven't been demoted as director. I have had to relinquish that so Sean could take center stage as the executive chairman. But I think everybody will be thrilled when he gets into the mix with TORQ, and he's been really, really working hard towards getting these assets. So I'll say one final remark for TORQ. The quality of the opportunities are big, and they are more than worth the wait. You're going to see copper and gold swings that would compete and rival the opportunities we have in Sombrero and tier 1. If you're asking me, why do you compete with yourself? We were long down the road before this, and we think we're going to deliver discovery across the group, and it's going to benefit each of the companies that we represent going forward. So very exciting time.
Okay, I love that, and thank you for sharing. Now, I'll finish on this note, and I've quoted this quote from Rick Rule a handful of times, but I just love it so much. He told me recently on an interview, he said, Jay, if I had only bet on the same 3 or 4 individuals throughout my career, I would have made 10 times as much money and worked a 10th as hard as I had to. Now that's easier to say in hindsight. You can reflect back on your career, look at all the good decisions you made and say, if I only made the good decisions, I'd be, easier said than done. But that's our challenge, right? As retail investors, that's our challenge, guys. We're trying to find those people of the next generation. And I say with confidence, Ivan, you're one of them, right? And I'm not trying to embarrass you here. I'm very bullish on Ivan Bebek, but I don't recreate the wheel. I follow the leader. Everybody who watches this show knows it. I follow the smart money and the top performers. Ross Beaty has called out Ivan Bebek as his top pick of CEO. If you look at Ivan's deals in the past, he continually attracts the smartest money in the business. Look at his shareholder base. And that's not an accident. It comes off the successes of Keegan Resources and Caden Resources, big acquisitions in tough markets. I'm very excited about your strategy. Thanks for sharing the grand vision, why you did the split and what you're looking to accomplish within your career, because it helps onboard us and anybody watching this into what you're doing and your plan. So Ivan, it was great catching up with you. I want to do it again soon. And I appreciate the update. It's always good connecting.
Thank you very much. Thanks for having me again. Appreciate it.
If you are just tuning in, my name is Jay Martin. I'm an investor and the CEO of Cambridge House International. Everything I do on this channel, I do in the pursuit of improving the performance of my portfolio. Today, we're doing a deep dive into the renewable energy sector with the guidance of individuals like Ross Beaty, founder of Altera Power, a renewable energy company that he built from scratch and sold for $1.1 billion to INNERGEX. Ross is also the founder of Pan American Silver Corp and the founder of EQUINOX Gold, both of which he's still the chairman today. We're joined by Frank Holmes, CEO of US Global Investors, and in my opinion, one of the top guys when it comes to understanding the growing China demand. E.B. Tucker, founder of KSIR Capital Management, and E.B. actually authored the KSIR report on behalf of the legendary Doug Casey. I am also joined by a few public company CEOs that are on my short list for my next investment. I hope you enjoy this. Okay, my next guest is the CEO of a strategically positioned copper exploration company, Rick Trotman of BARKSDALE Resources. Enjoy. All right, what's up, guys? Jay Martin here, CEO of Cambridge House, and I am joined now by the president and CEO of BARKSDALE Resources, Rick Trotman. Rick, how you doing?
Pretty good, Jay. Thanks for having me on today.
I'm happy to have you on. I'm looking forward to chatting and exploring this story in front of our audience and introducing you to our audience. I've gotten to know you over the last several months. We were introduced by a mutual friend. And had some great lunches where you kind of opened the kimono and shared the strategy at BARKSDALE with me. Got me quite excited, to be honest. That's why I wanted to have you on the show. I mean, what I'm doing here is, I decide on an investment thesis that I'm quite excited about, that I want exposure to. In this case, it's the renewable energy sector. I'm quite cautious how I approach, but I've decided to look at copper opportunities in this case. What I do next is I make lists of the CEOs in the industry, shortlist the ones that I believe are the winners. I'm all about people. I'm very people driven in my approach. Everybody knows that. And when I talk about people, I'm looking for track records. I'm looking for management teams. I'm looking for the capital that you've attracted to the deal, right? And you've got some shareholders that I've known for a very long time and deeply respect, like Frank Holmes, who I'm also talking to today. So we'll talk about that. But what I want to start with, Rick, is let's talk about high-level copper to begin here. You could have gone into any industry with your background. You decided to charge it a copper story. What about copper made you think, yes, copper, yes, now?
Sure. Yeah. Well, look, copper is one of those interesting commodities that is kind of like one of those big ocean-going freighters, right? It's very slow moving. They're very hard to turn, and they don't stop on a dime. And so when you look at the copper market fundamentals, you can be quite early, you can be quite late, you can miss cycles, but the key thing is identifying the key indicators that suggest that you're moving out of bottoms into tops, things like that. And right now there's a supply demand disconnect that is kind of shaping up. And it looks like we're going into a structural deficit here probably next year. So I think from a corporate standpoint, being in a commodity early, having a good asset, having a good team, like you said, and really push out the sails when the wind is blowing, so to speak. That's the key to kind of getting good value and driving home results at the right time. Because as you know, you can't push on the string. So even if you've got a great deposit, if you're in a bad market, you're not going to have the best success. So I kind of look for, that commodity complex to be shaping up. We might be a little early, but nevertheless, as long as you got the good asset and that commodity price curve is coming the right way, you're going to do well.
Right. I'm with you on that. And it's exactly how I approach this, right? I talk to people like you, getting a sense of where the best spot for my cash is, to be honest. And I always pair these conversations with the macro thought leaders who understand the big picture trends, have been in more battles than I have, and they've got more in their brains. So today I'm also talking to Frank Holmes, Ross Beaty, E.B. Tucker, a number of people, and I really want them to try to poke holes in my thesis or support it and say, yes, you're right to be bullish on copper right now. And to be honest, that's the feedback that I'm getting. One thing I think a lot of investors don't understand, and until recently, myself included, to be honest, Rick, is I have lots of experience investing in the gold market, in the silver market, in a number of commodities, but it's a bit of a mistake to look at a copper discovery or a copper project with the same lens that you look at a gold company, right? Because if you found an economic high-grade gold deposit, you got a couple options, right? You can either raise the dough and take that through to production, like Darren LeBrenz at Pure Gold or John McConnell at Victoria. Alternatively, you can look for a suitor. Right? And there's hundreds in the gold sector. If you're talking about junior, mid-tier, big caps, there's many, and I'm not oversimplifying this, but there are lots of options, right? And in the copper industry, it's not that way. To take a deposit to production is probably 10x the capital required and likely the time horizon. It's not realistic to expect a junior to do that. And so you have to remove that option. Secondly, when it comes to the suitors, there aren't hundreds. There's maybe 5 to 7 realistically, right?
Oh, sure.
So
Absolutely.
yeah, no. So do you find that to be the case when you're talking to investors? Do you have to communicate the plan a little bit differently? And is there a learning curve? Have you discovered that?
Yeah, so I think the key difference between a gold investor and a copper investor is exactly that earlier conversation that we were having about the cycles and understanding timing and things of that nature. So a copper investor will understand where they're at and where you can reasonably push a project based on the cycle timing. So for instance, if you have a very large porphyry prospect, things like Beaty would have had 20 years ago. Those are very expensive to push forward. They're very large. They tend to be considerably larger than kind of the comparable gold asset, right? As far as tonnage, infrastructure, all those types of things. And so you have to understand how and when to push a copper project. Whereas gold, you're mostly reliant on price, and price in gold is mostly driven by people's sentiment. So it is cyclical, but it's not the same type of supply demand structural regime as you would have for other base metals, for instance. And so the investor mindsets are a little bit different. Gold investors want snappy, fast. Give me results. Who are you going to sell this thing to now? The copper investors understand that it's going to take a little bit longer to play out, but the space is far less crowded, as you said. So if you can strike the fancy of one of those big majors or mid tiers, it's a smaller playing field. So the likelihood of eyeballs being on you is greater, so to speak.
Right. Yes. Okay.
And conversely, if you've got a nice asset in the copper space and you can push it successfully into being a producer, you have the potential to move up into that mid-tier, the small producer into the mid-tiers and be the consolidator yourself. So, you've got a lot of options in the copper space.
Okay. Now, I want to get into how that plan applies to Barksdale, how you're going to execute within that world. Prior to that, Rick, I want to get into your background a little bit. You made an interesting comment when we first got on the line here. You said, I'm all about projects over teams. That's your background, right? And you're very analytical, technical background, which struck me because I'm all about teams over projects. But the reason for that is I want the teams to be all about the project. I want to find the right people and have confidence they're going to worry and lose sleep over the project, because I can't. I'm not the geo.
Exactly. Well, that's completely understandable, Jay. The passion, the drive, the intensity, and obviously the intelligence and effort that's put into unlocking these assets, within the team is critically important. But I guess from my standpoint, especially when I was at the fund, we had a saying that you can always change what's above ground, so to speak, right? You can't change what metal content is in the ground and its distribution and its quality and its value. But you can change, management teams, board of directors, things of that nature. And so I'm always looking to have a fundamentally good asset that has high quality potential, right? Who knows? Maybe at the end of the day, they might not all pan out, right? But you want to have the signs indicating quality at the end of the day in the asset itself. And then that's going to give you a lot more slack, so to speak, going forward. Whereas if you got something that's kind of marginal, you don't have room for error. It's all got to go perfect. Otherwise, it's just not going to work out. And so that's kind of what I mean by, going for asset quality above all else.
Okay. Now you touched on this. I wanted to get into your background before Barksdale. You mentioned the fund. What were you doing, Rick, before Barksdale Resources?
Yeah, so before Barksdale, I worked at a private equity fund that specialized in the mining industry itself. So kind of invested in everything from kind of grassroots exploration, mining technology, all the way up to mine development. And so, quite a spectrum as far as dollars invested per deal, as well as the number of deals invested in. So that fund invested, probably $4 or $5 billion from obviously before I joined to the time that I left. But it was a great experience because I looked at literally hundreds, if not thousands, of different investment opportunities over the years. And I was kind of the exploration, minded person. And so I got to look at a lot of the earlier stage spivier things, as we called them, things that had a little bit of hair on them, less knowledge, more geology calls, and like you said, kind of betting on the jockey, so to speak. So it was a great opportunity for me, because not only did I get to spend some time with some great investors that made, their limited partners significant amount of money in the past on great deals that went well. But then I got the experience of looking at all those files, meeting all those management teams, looking at all those projects around the world. So really increased my asset-based knowledge, so to speak.
Now, was it always in the plans then, Rick? Because if I look at that from a distance, it's like, at the fund, you acquire the skills that at some point you can take to the public markets and run your own company with success. Was that the strategy, or how did you come to end up?
No, it wasn't always the strategy. I mean, at the time, I was quite happy investing and hopefully making money on those investments. I think over time, what happened was that I got a bit itchy, putting money into an opportunity, but then not having the ability to actually be the value driver myself, right? And I'm sure you've been in the situation where you've invested in something and you think, if they'd only done X, or if they'd only done this, it could have ended. Why didn't they go and talk to that company? Because they would have been perfectly, matched, and it would have been a great opportunity. Well, I kind of wanted to actually get out there and do that myself. I wanted to be the value creator. And so when the opportunity came about, without BARKSDALE opportunity presented itself, I felt like it was time. I had to, at the end of the day, bet on myself, so to speak.
Yeah, I love that. Okay. Now I want to talk about.
You've got to take risk, right? And I felt like it was the right opportunity and it was the right time. So why not bet on myself? Why not take the risk and get out there and pull some levers and make folks some money.
Right on. Okay, that's the attitude. So I want to talk about BARKSDALE now. And, like I said, I invest in people because I don't want to gamble on a drill hole. I want to bet on a strategy. So let's get into it, Rick. What's your strategy with BARKSDALE Resources?
Yeah, so the strategy at BARKSDALE is to basically make money on each one of our assets. And we have a portfolio of assets and we take a portfolio approach, but more so than that, it's making sure that all the assets work together, and the sequencing and the timing and the overall steps that we walk through add value along the way. And we've got a couple of really great projects in Arizona that, I think can really unlock a ton of value for our shareholders, and can really see our price increase if we get things right. And like you said, we, hit some nice drill holes. And then we've paired those projects up in Arizona with a new project down in Mexico that we think we have more immediate potential to kind of push that project along and get it into that development space. So what we really want to do, Jay, at the end of the day, is we want to find an undervalued asset where we can put that proverbial dollar into it, add a couple of dollars on top of it to de-risk it, and then have the opportunity to sell it or put it into production at a much higher value down the road, right? And obviously we want to get that done as fast as humanly possible. And so that's the strategy of BARKSDALE. Okay,
now let's talk about these assets a little bit.
Sure.
I think I've heard you refer to Sunnyside as the crown jewel.
It is indeed.
It won't be the catalyst for near-term news. So we're looking at Mexico for near-term news, correct?
Yeah. So if I talk about it at kind of the 50,000 foot level, in Mexico we have a copper gold opportunity sitting in front of us that is kind of a just about drill ready project that has seen a lot of historic work, and we think that we can get in there, drill it, make it bigger, show that there's quality, and kind of drive it to that construction decision in a reasonable time frame, right? Okay. And then on top of that, what we have are a portfolio of assets in Arizona that are kind of options. They're almost embedded options within BARKSDALE story itself. And so one of those is an early stage exploration project. It's a blind target, but it could be a very meaningful porphyry copper discovery. At least that's what the geophysics points to, is that there's
And
porphyry
which
copper.
is this?
That's the San Antonio project.
Yeah. Okay.
So we're in permitting on that one. And so once we have those permits, we'll be able to get in there, test it, see if our thesis is correct, if there's a porphyry copper, if that's true. I mean, that'll add a ton of value. It's the first embedded option, so to speak, in the Barksdale story. And then, like you said, Sunnyside is kind of that crown jewel in the portfolio. It's the one that might take a little longer to get to eventually. It's in a permitting process itself. But once we have the ability to get in there and drill, we think that it can be a really big value add. I mean, the neighboring deposit, is a world-class asset. And we, in fact, just share this one big world-class asset. There's a property line dividing the two halves, so to speak. And so we know one half is worth, well, it was acquired for billions of dollars. The goal for us is to unlock the other half, the value that for our shareholders on our side of the fence. And so that could be that big home run swing, right? And so that's the other embedded option within the Barksdale story.
That's why you refer to Sunnyside as the crown jewel. It may take some patience to realize that upside, but you're very focused on it. I've seen pictures of your property. It literally is separated by a fence line. So who owns the other half of that asset, Rick?
Yeah, so the other half is owned by a company called South 32. It was a spin out of BHP's non-core assets a couple of years back. So it's an Australian $10 billion market cap company, more or less. Mine a lot of zinc, nickel, manganese, coal, things like that. So it's pretty well diversified. And they started stepping into North America, looking for kind of, at least from my standpoint, some jurisdictional diversification, getting out of places like South Africa, coming into places like the US. And so they're kind of the new kids on the block, but they're, solid company, strong cash flows, and they do things what appears to be in the right way. So I'm very happy to have them as our neighbor. And they're advancing this project. They've got underground declines going in. They've spent hundreds of millions of dollars since they bought this asset a couple of years back. And they didn't buy it for a couple of $1 billion. So it just shows you that there is that value potential. It's already been partially realized in this district. We just need to not mess it up on our side, so to speak. Get a little lucky with Mother Nature, and then ultimately just show what is actually there.
Yes. Okay, great. Now I want to wrap up by talking about your shareholder base a little bit. It's what initially piqued my interest. There's always the first trigger point that says, I got to take a look at these guys. Frank Holmes has been a dear friend and mentor of mine for a decade. So when I learned from him that his fund had invested, and I got a lot of time for his analyst, Ralph, very intelligent gentleman. And as well, I believe you raised some money from his Cisco Gold royalties, correct?
I did. Yeah. So when I first took over the CEO position at Barksdale, it's kind of back then we only had really one property, and it was kind of a niche story because it was lining up to start a permitting process. It was going to be a bit of time, and most investors, they're not well suited to kind of spend years waiting, right? And so what we did was we went out to folks like Ralph at US Global and Frank, a couple of other funds, got them into the story with the understanding that it's going to take a couple of years to play out, but the value potential is there. Put your money in, sit, wait, and we will take care of you at the end of the day. That we'll get the opportunity, and then it'll all work out. This isn't one that you're going to want to check in on a daily basis to see where the stock price is at. And they ultimately did that. They wrote the checks, and they're patient. And then subsequent to those funds coming in, we brought in Cisco Gold royalties. They were very active in the district already. They had made a royalty purchase and an equity investment in our former neighbor, Arizona Mining. And so they had made a lot of money on the day that Arizona Mining was taken out by South 32, and then they had this residual royalty over that asset. And so we targeted them because we understood they knew the rocks, they knew the district, they knew the potential, And so they would be the natural party to kind of come in and support us, also being very patient investors, right? As a royalty investor, they're totally in line with that long game, right? And so they also invested, and then later on, probably 6-7 months later, we brought in Tech Resources. After it was Cisco, also being another patient long-term investor. And so what we did, Jay, is we just kind of went through the Rolodex and really selectively went after the folks that we thought the story would resonate with, and that also could be the types of shareholders we ultimately wanted. Those patient long-term folks that identified and recognized what that real value is down the line, and were willing to invest in us and take that risk. And so it's worked out, I think, fantastically since then. We've consolidated the district significantly, partially using some of the cash and shares. Well, the cash certainly that we brought in during those investments. We've more than doubled our land position in that district, and then we brought on the new project in Mexico. So, hopefully we will continue to unlock value, and the share price will respond. So that way, all of our patient long-term shareholders make a ton of money. Okay,
I'm with you. All right. So to summarize from my standpoint, the reason I turned my head, the reason I wanted you on today is I see, a multi-asset, strategically located asset, but early stage opportunity that's attracted some very impressive capital, the likes of the Cisco, Tech, US Global, long-term stable capital. That's what's nice about that, right? Rick, it's been awesome having you on and introducing this story to my audience, introducing you to my audience. I want to do it again. Let's come back in a few months and see what's happened. I'd love to do a follow-up piece with you. So thanks again for your time, and appreciate it, man. Okay, my next guest is the CEO of US Global Investors, one of my favorite people, Mr. Frank Holmes. Enjoy. What's up, guys? Jay Martin here, CEO of Cambridge House, and I'm joined by the CEO of US Global Investors, Frank Holmes. Frank, how you doing?
Outstanding, my friend.
Good to hear. It's great to have you back. The most challenging thing, Frank, about interviewing you is that I always show up with like 12 things that I want to talk about, and focusing my attention on one or two narratives is always the challenge. Today, I want to focus on the copper market. I've become increasingly bullish on the renewable sector, and I'm looking for different angles and how to play it. I think, I've settled on sort of the copper nickel angle. It seems like the most predictable. And I want to get your thoughts on this. So, you published some content this week on the copper market. I think the title was "The Copper Bull Market May Just Be Getting Started." We've hit high prices that a high since 2013. So what's your take, Frank? Are you bullish?
Well, so many guys that are good newsletter writers have been so bearish on it. And,
yes.
And Jay, when I speak at your event every January, I usually bring in a few minutes about PMI and the significance of following Purchasing Manufacturing Index, because it's a leading indicator. The GDP is looking behind. And I'm a big believer that government policies are a precursor to change. So that's why we track monetary and fiscal policy, and it's so key. So what do we have? Last year, we had roaring PMI. China was on tear, Europe was on a tear, the US was on a tear. That means above 50, it means expanding, and that means good demand going forward for the next 6 months. China basically falls out of bed. It has its worst drop in 30 years. And then the US has its drop, its massive drop, like 2008, going to that period. And with that, you immediately saw the pumping coming on. The pumping came out of China first, then the US, and then it was this amount of money going out, and you had this MMT being practiced. Modern monetary theory is being practiced, Jay, in all the countries around the world, but differently. South Korea is different than the US, is different from Europe. But the fact is they're using monetary policy to stimulate. And you really can understand PMI when you understand the money supply connection, and you saw the surge happens in China. Boom, it's over 50. Oh, what's happening here? The US is slowly climbing out of its lows. And then we're out of them, and we're expanding. So this past couple of weeks, the US reports almost a 57 PMI. I mean, that's just ripping it up. China comes out at 55. Now, why is that important? Because China and America is the biggest trading block in the world. And when they have robust PMI like this, it means big demand for copper. Where's the supply coming from? It means big demand for iron, for steel. It makes big demand also for oil and gas. It's the pickup. Silver. You start seeing platinum, palladium. So it's really interesting. We've done all this correlation analysis going back 20 years of looking at when PMI last month is above 3 months or below, what are the ramifications for copper prices? Well, those numbers are just a home run. The only drag right now in this global footprint is Europe, and they're under 50. It means still contracting. But bad news is good news, because they're going to go out with another $1 trillion green money. Guess what? Green bonds, green money, that's just phenomenal for copper. It's also great for silver, but in particular for copper. Now, copper has something else that's really unique to it. Supply side. Supply side is shrinking. It's shrinking because it's disruption because of the virus impact around the world, or strikes in Chile. And third is grade. Grade has been shrinking and shrinking and shrinking, so they can't get this volume to give you the amount of copper. But now we have the money machine printing. China consumes over 53% of the world's commodities. Their PMI is on a tear, US on a tear. Guess what? Copper trades much higher. $1 trillion going to green. Biden's going to come in. He wants to spend a lot of money on green, another $1 trillion. You're going to have to double, as BHP says, the supply of copper to meet the green trend in the next 30 years. It's going to have to double. It's not there.
There's a lot there I want to unpack. And actually, I want to back up a second just to get back to the PMI, because you reference PMI frequently and have for a while. We're talking about the Purchasing Managers Index, which, if I understand correctly, Frank, and correct me if I'm wrong, gives you, it's like a 6-month leading indicator, right, of commodity demand at a relatively high level. Now, my question for you is, what's more important, the number or the trend? When you're looking at PMI numbers from different countries, what are you paying attention to?
The number is most important when it's above 50, because it means your country is expanding its economy. And after that, the most significant number is the last month is above the 3-month average. When that trend is in place for global PMIs, it's the best for commodity demand. And now for listeners, what does it mean? Well, they call up companies and say, are you getting demand? Oh, yes, I've got to make 50,000 new copper motors. You do. That means I'm going to have to use more energy short term. I'm going to have to order lots of copper. I'm going to have to hire people to build these motors. So that's very robust for the next 6 months to deliver that. And then the next month, guy calls and he says, now I got 100,000 motors to make. And then I've got 200,000 motors to make. That's what gives you that rising trend that's very significant to commodity demand.
Okay. Yeah, it helps me understand the significance, because a 6-month leading indicator is something you can action, right? That's near-term action. Okay, now we touched on copper, and I've become quite bullish on copper. I wanted to share this with you and get your thoughts, see if you're going to poke holes in my thesis and tell me I'm early, I'm late, whatever. But it seems like the number of drivers, whether it's inflation / a weak dollar, economic growth, growing PMI numbers, or the renewable energy trend, there's enough catalysts that could be very bullish for copper. So out of those, or something I missed, what are you paying the most attention to?
Well, I think there's no doubt, and we got to remember, Jay, supply. Any type of disruption in supply, you're going to get a spike in any commodity price. Right. And this sort of quick fix by the G20 finance ministers and central bankers around the world is print the money and just get it into the economy somehow, some way. And the fact that how fast they do this is a big game changer, and that real assets like copper, gold, silver, they're all going to take on a new dimension in this next wave. And take a look, some smart money is telling you this, because Capstone's up 174%. Freeport, the biggest copper gold porphyry deposit in the world, well, it's only up 140% this year. That's not bad. One of my favorites is Ivanhoe Mines. It's up lagging those two big animals. It's up 93%. But if I looked on a relative basis to reserves and grade and did a computation, I think Ivanhoe gets taken out by the Chinese in the next 18 months, and it's got to be double this price where copper prices are, and thus they have the Platts reef coming on.
Okay, yeah, I was going to ask why Ivanhoe was your favorite. You see it as a takeout target. That's why you circled it. Okay. Now, when you look at so yeah, and it's interesting and difficult for gold investors sometimes to apply their thought processes to the copper market because the business model is different, specifically when you look at the end game, right? To take a gold deposit, put it into production takes a certain amount of cash, certain amount of time, then you could 10x that for a copper deposit, right? Plus the suitors that might buy, there's a couple hundred in the gold market, junior producers, mid tiers, big caps, in the copper market what is there, 7, 8, like there's not a lot of players, right? And so it can be a mistake as a gold speculator to apply the same lens to copper. What do you think about that? Any advice for gold speculators looking at the copper market?
Here's this interesting studies from years ago, and it repeats itself at the peak of every cycle. You could buy copper gold porphyry deposits, producers, that is, they have copper and the byproduct is gold. Like Freeport-McMoRan is a copper mine, but it's a massive gold mine for how many ounces they throw up as a byproduct. What happens at the beginning of the cycle is you can buy the copper gold porphyry companies and copper stocks a lot cheaper on a cash flow multiple basis than the gold stocks. But at the end of the cycle, when everyone's just hurting in here, they go to the same multiple. So actually you can make more money on a copper gold deposit than you're going to make on just a pure gold producer. It's hard to believe it, but I can show you these cycles. And interesting enough, Newmont and Barrick, they're big copper producers. That's like 30% of that cash flow. And so the most important part with the quants look at those two stocks is their revenue per share growth last quarter over 4 quarters, their cash flow last quarter over 4 quarters. Are they aligned? And if they're throwing out free cash flow and they're aligned, those stocks get bid up quickly by the non-gold or commodity investor.
Okay. Now, you referenced a statement that BHP made earlier this week, and I think you covered it in an article you put out. They've come out stating they expect current trends, I think it's mainly renewable energy is what they referenced, again, correct me if I'm wrong, to increase copper demand by 100% over the next 30 years. They expect demand to double. And you touched on the supply crunch that you see. So if we're focusing on that renewable energy trend as the main driver, can you identify any main obstacles, any blind spots that we might have that would slow that progress down, Frank?
Just government policies. And I think if you get any problems with countries that impact supply, copper trades higher.
Okay.
Those stocks, you have to take a look at geopolitical risk when you look at those companies.
Okay, then I want to jump onto that. What countries are leading the charge when it comes to the renewable energy transition?
I would probably think in a big way is the Congo and how fast that Friedland's been able to get his massive high-grade deposit developed without any difficulties. And I think it's going to become very stable because of the huge Chinese influence, and that they're building railways and building new infrastructure to take it into this century much faster. So I think that's a surprising country. Zambia, great copper, but it's such a dysfunctional government. They move the goalposts all the time, what they're going to tax, what they're going to do, etc. So that makes it difficult. Maybe the sleeper is going to be the big copper gold porphyry deposits that are here in America. I know that some smart investors have been buying them privately and banking them, like Robert Friedland. He's been whatever he can get his hands on, been doing it, accumulating. And I think when you go through countries like Colombia, if you have a big copper gold porphyry deposit there, I think they're going to become much more interesting. And in Canada, it's going to be, once again, government policies.
Got it. So you're talking about the supply countries, and when you look at demand, Frank, like when it comes to creating demand off the generation of renewable power and the storage of that power via battery technology, is China leading the herd here, just based on population and momentum?
Well, they've had such a pollution problem that they have to. I mean, it's a big issue that Beijing, how bad it was, and it's improving. This year was much better than last year, and substantially better than 5 years ago. So I think that there's policies in there to push for green energy wherever they can.
Right.
And try to stop coal. And so all that thought process will be, it'll be wind farms, solar farms. I think they're just going to grow in countries like China.
Got it. Got it. Okay. Now I want to pivot.
I want to share with you, if you go to West Texas, drive out to West Texas, and
Right.
it's like a country movie, and you see the tumbleweeds coming across on the highway. But when you look at the right, you're not going to see cattle. You see huge, humongous wind farms for miles and miles and miles. And
Right.
guess who put them in? Exxon.
Right. Right.
Exxon. So there's been a couple of times now in Houston that electricity for the day costs nothing because of the surplus electricity that's coming from the wind farms. So I think that the success of that allows itself to grow across the nation.
Got it. Got it. Do you ever see opposition to those wind farms vocally, Frank?
Yeah, there'll always be some extreme greenie, and it comes out of noise and the birds, concerned that birds fly in and get killed.
Sure.
You've seen that more of Europe in the offshore facilities they have. I think in Denmark there's been concerns for that, but I've not really seen it here in Texas.
Right. Right. Okay. Okay. Thank you for that. I appreciate, and I appreciate your thoughts on the copper space. Now I know I said
but the renewable, you can't forget. I love copper. Love it. Love it. Love it.
Yeah. Yeah.
But you can't forget silver, because the big driver is not just the writing on the warrant on gold. It's solar panels. The solar. Who's the biggest solar company? It's China. Guess what? They're importing all this silver. They need this silver. So part of that whole renewable of going to solar farms and going to wind farms, well, you're going to need copper and you're going to need silver. And then the other magic ingredient is going to come along is nickel.
Okay. There it is. Yeah. And as I understand, I mean, that seems to be the most sustainable ingredient in battery technology. And when we look at like renewable energy tech, like it's still new. I think we're just getting started, right? Battery storage, like still battery technology storage, still new, just getting started. Whenever you have some kind of, new tech like that, in order to attain mass adoption, there's going to be pivots along the way because you're going to hit roadblocks, right? Take cobalt, for example. Cobalt was a key ingredient in battery tech until we discovered it was really difficult to get your hands on. And so it's been engineered out in some capacity, right? Lithium, turns out, is it abundance? Maybe it's not the smartest angle to play this market.
Yep.
Nickel, however, strikes me as probably the most predictable and safe commodity to play if you're bullish on battery technology. Do you agree with that, or what do you think?
I agree with you. And that's something there's been very little exploration in the nickel space, where a junior mining company is just focused on nickel and nickel deposits and re-engineering, looking at the exploration, the latest techniques to explore for it.
Interesting. Okay. Okay. That's a wrap. Thank you for coming to the Future World Summit. I hope you enjoyed yourself. I certainly did. Honestly, I love hosting these summits. So what I want from you is, if there is something you would like us to focus on next, please drop it in the comments and let us know. We'll put it together. Okay. Until next time.